So this is not a market that has like a ton of fear baked into it by any stretch of the imagination. A VIX term structure that's in this kind of contango is effectively as normal can be.
Yeah.
And I mean, if I'm a bull, this is one of the things that I'm leaning on right now. Okay, where's the vol? If this really was a problem for the market, if this wasn't just shuffling of papers around left and right, rebalancing, window dressing, yada, 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 volatility would be freaking out. And that is, I think, a fair critique. So
Sure.
maybe what we're seeing, I mean, chop.
Yes, but as a trader, you do have to have a little bit of anticipatory element to this, because by the time you see it in the vol structure, the move has already played to a point where your risk reward on participating has meaningfully run away. So you do have to listen to the price action and then get confirmation from the vol. And so this is why I'm constantly harping on starting a position small, risk defined, and hey, if it works, scale up. You can always add. The market's always there. But if you don't listen to the price action in the beginnings of moves like this, we've talked about stock markets stair step up and elevator down. If there is a significant sell-off, you're not going to have a long window to participate. Things just level down because markets don't panic buy, they panic sell. And so you look at this and you go, okay, well, can I afford to wait for the vol to confirm? Don't you wait for the vol to confirm to add to a position? But if the price action is telling you take a stab, I don't think waiting for the vol to expand is really something that most people can afford to do. They're going to miss the boat.
Yeah, and I think a bigger picture point here before we go over to the bond market, if we think about the range that we've been in since the start of July, it's effectively at the midpoint right now. We're talking about 64.60 or so and 62.40 or so. So at 63.50, you find yourself at the midpoint, just through the end of the week right now, right? If we wanted to just trade around those levels, you could get a 1 DTE risking 5 to make 1, even if you go into the end of next week thinking about, will this market just churn for the next few days? If that's our kind of our attitude, going back to 62.50 to 62.25 and on the high end, right? We'll call it 64.25 up to 64.50, just to give round numbers. Betting on the range, if you will, if this is going to hold, this is the time to do it. If we think that we're going to chop here for a little bit, I think there are plenty of opportunities. So while I started off this equity segment with the whole, VIX is kind of in a place where you don't feel great about it one way or the other. When you're range bound, the demand is to be directionally neutral. So to that point, I think, Ilya, through the end of next week, I already have some downside exposure in ES. So adding more to that basket, I don't know if it's the right thing to do, but looking for this market to potentially just coil around here for the next few days. 8 DTE, maybe we can get a run into the middle of next week without much agita.
Yeah.
I think that's worth it. So color me interested. I'm in. Let's stay range bound in the range that we've been in since mid-July. Hopefully we get pinned near 63.50 or just glide lower the next few sessions.
Yeah.
That's really all there is to it. That's what I got going for stocks. Russell short, S&P directionally neutral and short tilted. Bonds breaking my heart here, although they had rallied up. So easing back towards the midpoint of ranges isn't necessarily a bad thing if you're a short iron condor person like myself.
That and bonds take a long time.
Right, that and bonds take a long time. So I go over to the daily chart here. ZN is effectively pulling back from the top side of its range. ZB with the auction results today, pulling back from its recent range highs that we saw in the beginning of July. Just to go over the auction results here, I did see a different read on it than what I said earlier. The 6-month bid to cover ratio is 2.4. 2.4 for the 30 years. The indirect bidders were 61.9%. Okay. This past auction came out of the top of the hour. 2.1 basis point tail, gross. Bid to cover ratio, 2.27. Gross. Indirects, 59.5. Indirects are your foreigners. So the 6-month average was 61.9. They now come in at 59.5. Demand per hour long in bonds was not there at today's auction. So we've come off 10 ticks. It seems to have weight on the equity market as well, because you could make a case that this is a tariff story. New tariffs are in play, less trade with the rest of the world. Fewer US dollars will be circulating out there. Fewer US dollars to recirculate. Foreigners incrementally don't need to boost their dollar reserves. At the margins moving forward, they need to reduce them.
Yes.
So, okay, that's not too hot that we have now a 10-year auction that's bad, a 30-year auction that's bad as we enter this new tariff window. Maybe stocks are starting to wake up.
The tariffs did get activated.
They did.
And we're not seeing 15. We're not seeing 10, which were the sort of baselines for the deal making and the floor that was introduced. I think only Australia really got the 10% tariff of the major economies that I can think of off the top of my head. Everybody else had to either strike a deal around 15 or today eat 50. 50 is high, very, very high, considering the average before all of this nonsense was closer to 2.
Yes, the effective tariff rate right now, if everything that's been put into place today holds, will be 18.61%. We started the year with a 2.4% effective tariff rate. And so the knock-on effects, as I've seen from some economists through like the Budget Lab over at Yale, decline of GDP is going to continue into mid-2026, bottoms out in Q3 26, and the economy ultimately by 2029 is about 0.5% smaller than it would have been otherwise. Smaller economy, less growth. Okay, removing a growth premium from the long end of the curve. Okay, but the reality is here in the short term, there are the dynamics of who's showing up to the auctions. I have a question for you though, before we talk the trade specifics.
Sure.
What the heck happened yesterday morning? Did you ever figure this out? Because I have not seen.
I cannot for the life of me figure out what that was.
Chat, maybe you know. Chat, please let us know. The YouTube comments are on and active. If you found an explanation, I have talked to people that I know that work at banks, hedge funds. I've looked to the news. I have found no compelling explanation for why the U.S. government bond market was trading like a meme stonk yesterday around 11:30 in the morning.
No, I called around. I pulled out the contact book institutionally, not institutionally, news, the commenting universe, everywhere. Couldn't make sense of it. Nothing looked like there was a lot of hand wringing and a lot of, well, it was probably, or well, it could have been, but not a lot of it was.
No, I don't see a lot of, was this a flash crash? I don't think so. What happened yesterday? Either way though, the kind of instability that you're seeing at the long end of the curve, that's not an insignificant move, and it does raise an eyebrow. I digress. We talk about the midpoint of the Liberation Day World Trading Range coming at a 15.5.
Which, by the way, really interestingly, we clear out the closing high from that July range top. And when we try on that flash crash, I guess, kind of a thing, to test back above it through, man, we find a trampoline down there to get back up over those levels. So this still looks pretty constructive to me, because that's a big rejection.
Right. There's this whole area here right around, let me pull up the drawing tool. You see here right around like 114.5, where the market resistance, and then boing, support again. Yeah. So maybe that's a floor. If the market does ultimately sell off and bonds soften away to continue the series of higher highs and higher lows, we'd want to see the low here at 114.11 ticks hold.
Yeah.
After the auction, can't rule it out. But the big picture, right? If you're trading this sideways, like I am for the most part, I still have some have a 117 call, 120 call spread that's not working, and 1.5, just need a 1.5. We see ourselves here at the midpoint. If we were to do this trade again today, is the juice worth the squeeze? A question we often ask ourselves. 61%, risking 3 to make 1. The volatility is not too hot. It's a 5.7 IVR, right? Maybe ZN is the better product because you're going to get similar volatility, similar type of ranges. Maybe TLT is the shoe that fits. But as long as we're not like a 5-to-1 risk to reward, even like a 4-to-1 risk to reward on a short iron condor that has a 60% pop, I still think it's comfortable. So again, taking a look at this with fresh eyes, would I put something like this on again? Maybe not these strikes, but directionally neutral still makes a good deal of sense from where I stand thinking about the bond market big picture, if not having some semblance of upside tilt, given the very legitimate recession concerns that are accumulating.
Right. And before, not to jump the gun here before we get into the world of currencies, but what we learned from the Bank of England overnight, who faced a similar set of circumstances as what the Fed is worried about in the US. And I talked about this on Macro Money extensively yesterday, that it looked like the markets were very convinced in what the Bank of England was going to do, and have been very convinced in what the Bank of England is going to do. The delta on the implied policy curve for months has been almost non-existent. The markets have been very, very convinced in what they thought was autopilot for the Bank of England. They got the cut, but the decision was a lot more nuanced and a lot more finely secured than the conviction that the markets had. And it's because of these concerns, these stagflationary trap concerns. Because what you have in the UK now is slowing economic activity, but inflation surging to a 17-month high. And so in some ways, this is exactly the kind of a thing that keeps Jay Powell up at night. It's exactly the reason why the Fed has been reluctant. And now we're seeing another major central bank operating a similarly kind of open, similarly minded kind of an economy. Certainly not in size, but in sort of structure and thrust. Seeing exactly the kind of a thing where you'd go, oh, well, this is the problem that the Fed doesn't want to have. And that's why they're holding off. And now these guys are having to swallow it and figure it out. And look at how hard it is for them. They're split on the 9-member MPC was a complete hodgepodge. They had to have multiple votes because one guy wanted a 50 basis point cut.
And the pound's up today. Only currency up versus the US dollar. Ilya, the bottom results.
That was a hawkish announcement.
That's how it's being perceived. Just to reiterate, if you didn't come here at the top of the show or when the bond market section started, we had a 30-year auction at the top of the hour. Past six auction averages, bid to cover of 2.4, indirects at 61.9. This auction, we tail by 2.1 basis points, which is typically bad. The bid to cover is 2.27, which is bad. Indirects are 59.5, which is bad. I would encourage folks who are interested in learning more about how to read a bond auction. You could always Google how to read a bond auction and find our piece. It's like the second or third hit on Google, or you can just simply go tastylive.com/news insights and look for the reading treasury bond auctions. It's an article I put together last year or the year before at this point, 2023, almost 2 years ago, but how to understand the results and what it may mean as a read through for macro level flows in the economy and in financial markets. So let's move on here and talk about metals, which another day, another inch higher. It feels like that's been the only appropriate way to describe the price action here this week, where very systematically up and like a sine wave, 2 steps up, 1 step back, 2 steps up, 1 step back.
Yeah.
You've been short gold. I've been long, so that puts us at odds. Where do you find gold going over the next few sessions, given the fact that we have this movement in the dollar today?
It seems like we're still basically drifting sideways. So I'm okay sitting here short vol. Now, granted, I have a bearish tilt on my short vol because I'm short calls. But I'm okay with basically letting this thing figure itself out. Because if you look at essentially where you've been since, let's call it late April, there's that swing high on April the 22nd. There's the follow-on spike low on May 15th. And inside those peaks, you're just kind of consolidating in what it's increasingly looking like a triangle kind of a thing. And it's symmetrical-ish looking. So the presumption would be that this is a continuation pattern that ultimately favors gains, but it's so sideways that it's tough to really see. But you do have clear breakout levels. 3440-ish is the range top from, let's call it, the beginning of May. That's sort of the inside range on the triangle. The lows at the end of May 29th, the anchoring low at about, let's call it 3240, 3250. Give you a kind of bottom. So you essentially have about a $200 internal range in here, and you're right in the middle of it. So I don't know that there's any impetus to do much of anything. Vol is relatively low. So putting on something vol extracting that's neutral doesn't seem terribly attractive, though possible, at 20.3 IVR. It's not nothing, I suppose. But in my mind, if you want something directional, this thing is going to have to break.
I mean, right now the structure is still there, so to speak. Since the start of the year, we've effectively had this 1 month above the 50, which is above the 100, and the market sells off. The 50 and the 100 are providing catch points. Even most recently, you see a market that produces an evening star, excuse me, a morning star candlestick cluster in that zone between the 50 and the 100. So like little breadcrumbs that the uptrend has been taking a breather, I think, for the past few months. Which again, granted, hats off to you and Mike and others around here who have correctly identified, tons of vol. I'm just going to extract it. You've been short put spreads kind of guy most of the time. I've been more long calls. You've been doing better than I have. This time feels different. Shouldn't say that. So it's working. Yeah, it's working today, right? I think that's the big picture. Like it
is working today.
I'm still leaning in GCV5 technically. The Z5 contract is not where I'm operating. GCV5. Back to break even on the 3,500, 3,525 call spread as of today's action. I want a little bit more because I'm being greedy, and then I can just get out. I just want to get it off the books and reset, take down the risk.
Yeah.
This is, I have a hard time getting really bared up here because I just see this market.
Oh, I agree.
It looks really good from a technical perspective. Same for silver, though, up 1.05% now. It is off the highs, granted. The high today comes in at 38.76, so that's not an immaterial drop from the high. I personally like the structure that's been put back into place, where we've moved back through the 37.70 level or so. Swing high from June 17th, lows that we have July 17th, poke back through there, and yesterday you could just ever see so slightly on a lower term time frame, treating that as support now. So metals look good. They survived their little pullback. What's the bear case here? I mean, I know you say vol extraction, but 9.6 IVR in silver?
I don't think there's much of a vol extraction conversation in silver. I think in silver, you look at what's going on in stocks and you go, okay, here's a thing that's sensitive to risk sentiment. And if risk sentiment comes off, this is a high volatility, higher risk type of asset that's going to get smacked in that kind of an environment. And I think that's the concern if you're looking at silver. Having said that, I'm no seller of silver here. Nothing says that this necessarily is a downturn that's building. In fact, you're basically inside that kind of congestion area, right around current levels where you found fuzz on the way down. You're pushing kind of narrowly through its top and trying to hold above it. So this arguably looks more constructive than it does destructive. And I don't think, I mean, I'm certainly not interested in laying out any shorts here. It's clear what the risk is, but there's nothing actionable here to actually do anything with, in my mind.
Yeah, and then it gets back to the whole: if I want to be bearish silver, do I want to sell calls or call spreads in silver? And at a 9.6 IVR, that's a really difficult trade for me to stomach, given the relationship we've seen play out with silver prices and silver volatility. I'd rather just be short SLV, maybe SIL micro silver outright. But looking at trying to monetize a position here, let's say you go to 49 days, you think the rally's overcooked, so let's go 40, 41. This is hey, you're risking 3 to make 1 kind of trade. A little bit better than that, but not by much. You really have to play it tighter and effectively call a top to get any semblance of a good risk to reward. Yeah. I'm not crazy about it. And look at this is now requiring, I'm selling a call spread, but it's going to require a debit.
Yeah. I mean, this is kind of why I'm okay with my current gold situation. Like, yes, I'm tilted short. Yes, the trade is losing money. But because I did it through selling calls, the premium I've received is at this point double the floating loss, a little bit more. So while it's range bound, okay, fine. I'm de facto up. So either it breaks out or it doesn't, whatever. If I see that it's running away, I take what's left of my premium, put those breadcrumbs in my pocket, and move on. But silver is a different story. It's jumpier. It's less clear cut.
You look around, gold futures are basically, I mean, given the continuous contract, I mean, this would be, I think, a record high close. Yeah, this would be a record high close here, Elia, on the continuous contract. 3452.80 is the previous record high close. We're at 3456.80 right now. Interesting.
But right at the top of that range. I mean, you can see where that gap is back in early June and where the swing high is in early April. I mean, you can very clearly see where the bounds of this congestion are, whether horizontal or not. And it's clear, like, if this is the moment, this thing has to put up or shut up. It's here, it's now. Either break or don't.
Could I give a little self-promotion? TastyFX's education portal here has a section on ascending triangles and how to trade them.
Yeah.
And I look at this chart pattern on our screen, and I think it looks a lot like what we're seeing here.
Yeah, it does.
Rally up, right? Go into a pennant, start to poke higher. So that would mean if this is going to follow its path, we're going to break out to a new high, pull back into maybe 34.50 again, and then really rip.
I mean, that's my cue to flip the cards over. So, right. and it's why I structured the trade the way I did, because as you know, you and I agree, structurally, in a year where you're afraid of a growth downturn and you're expecting the Fed to cut rates a bunch eventually, the bias on gold is long. So
yes, it is.
So what you're doing in the interim is tactical. It's not the macro outcome that you might expect. And I've been tactical in gold through this congestion. My macro radar is looking for an upside break. I'm just sitting on some premium here and going, well, I might as well pick up some pennies in front of this steam roller while it's idling like this. But the moment it pokes out, I'm going to take whatever pennies are left and flip the cards.
We move on to the energy sector here. Energy is chopping around. It was a touch softer earlier. And as we take a look at it after the auction results, not that they're totally related, but if they do speak to a potential tariff-induced change in market behavior, we would see that oil is still struggling to clear out a return through the midpoint of its trading range. This is beginning to look a little bit more directionally bearish, Ilya.
Yeah, it is.
Right. I don't want to discount the fact that this has worked really, really well. And
just put a horizontal line through that mid-April high.
I couldn't possibly do that. I like using Fibonacci's.
You could do that too.
But that's kind of
it's always funny, by the way, how you put fibs on a chart and they line up with the levels that you would guesstimate by just putting a horizontal line across for the most part. And where they line up, those levels tend to work, and where they don't, they tend to be flimsier. So you do get kind of a range here, a kind of sense of here's the band, because of course support and resistance is never just a line. It's usually a kind of zone, if you will. And you do get a sense of what that zone is right here.
We saw the zone in play back at the end of June into early July.
Yeah.
When we pulled
right
back in and treated support as the former resistance from the April and May swing highs closer to 62.75 in the CLU contract.
Yeah, that's the line in the sand as far as I'm concerned.
The 50% mark of the trading range, which 50 is not a Fibonacci number for what it's worth, but the halfway mark of the trading range, support throughout July here going into August. So now that we've broken into it, short-term scalpers probably see 62.75 as a downside target. You can see here on the 4-hour chart, we've tried to make a move back up through 65. Support becomes resistance. And we now fail on our screen, and we fail and we start to trade lower. It's a 25 IVR. So the question then becomes, is this positioning still viable? Is this trade, which was put on a few weeks ago, still viable? We've been rolling forward short iron condors for a few weeks now. You know what? I think it is. Maybe the strikes are right. I'm going to hold on to it. Maybe the strikes are inappropriate. Maybe it's 72.74 on the top side now. Maybe it's 55.75 here if I was putting this on with fresh eyes. It's still going to give the 3.5, 4-to-1 risk to reward.
Yeah, I mean, it's
not
basically
the greatest,
the same idea.
But it's still appropriate, right? Now, if we got below 62.75,
well, then you got to be directional.
That's when all of a sudden, okay, you know what? This is not appropriate to be leaning directionally neutral. There's a little bit of downside acceleration here.
Yeah,
there's probably a lot of
stops. You got to look for the lows there now.
Yeah, maybe the adjustment is worth it for some, or maybe even me, insofar as if this thing does break through 62.75, take off the short put spread side, all of a sudden I have a nicely positioned short call spread that I can begin to think about rolling down and treating this a little bit more directionally. But the implications there, when oil trends, there are usually implications for the broader market. Trending higher, growth or inflation. Trending sideways, everything's fine. Trending lower, misunderstanding of supply and demand. I don't think we have a misunderstanding of supply, given what we know.
No, more so demand.
More so demand. We had the PMI data this week, Ilya. It was all trash.
Those ISMs were terrible. And
they were terrible.
The striking thing, and I wrote about this for the Tasty Live News and Insights section. I talked about it on Macro Money. The markets received two pieces of service sector PMI data within 15 minutes of each other. Now, granted, One of them was a revision. S&P Global produces a flash PMI number. Then they finish tallying up the data, and 2 weeks later, they give you the final outcome. This was the final outcome. It was a revision of the prior number. So, in essence, yes, the markets did have a glimpse at one of these before, but it was revised higher. So it's not just that it's old data that was tilting this thing more positive than the ISM numbers that came out 15 minutes after. The revisions actually were even more positive than the original number. Mm-hmm. So as more data from later in the month was collated, the S&P Global PMI number became more positive, not less. So it's not like, oh, they just went earlier in the month, and now toward the end of the month, there's this crappy set of numbers. Okay, we're going to downgrade it, but it's colored rosier because the beginning of the month was rosier. No, that's not what's going on here. So the markets get a really positive S&P Global PMI number, services and composite. 15 minutes later, they get the ISM number. They ignore that S&P Global number completely.
Yeah.
They don't even look in its direction. They get identical sets of figures, and they pick one, and they pick the weak one.
That's really illustrative because it mirrors what we're seeing in the earnings reactions right
100%,
now.
100%, and you're mainlining my thinking here. That's exactly it. You've been talking about this all week. The markets are more responsive to negative surprises on earnings than positive surprises. They're fading Microsoft and Meta earnings when they're explosive. They're fading a trade deal between two of the biggest consumer markets in the world. Probably the biggest risk other than US versus China to the global economy. This is emblematic of a market that is not listening to good news. And that's probably the most bearish thing you could possibly imagine.
Yeah, the earnings data divergence right now, according to FactSet, 5-year average, the 2 days before, 2 days after an earnings release, companies that are beating their expectations historically have seen a 1% gain in their share prices. For the second quarter so far, we're looking at a 0.9% gain. Okay, not a big deal. A little bit not as good as typically the winners are rewarded. But it's the losers that are being punished. Again, 2 days before, 2 days after that 4-day trading window around an earnings miss. Over the last 5 years, companies have typically lost 2.4% on average. This year, it's 5.6% for the second quarter. So winners not being rewarded as much, losers basically being doubly punished. And then you think about the PMI figures, right? It's kind of a corollary. You have some good news, the market goes, okay. And when the bad news rolls in, it freaks out.
Yeah.
So important psychological
and this is the story of
to recognize.
This is the story of the previous week as well, where you get that breakdown. Because the markets go, okay, good news, nah. Good news, nah. Good news, jobs data, oh my God, sell off.
But doesn't that make sense? If you're a market participant, and we see the comments here, like, don't talk about tariffs anymore, Trump's going to chicken out on them. If that's your mindset when he ultimately chickens out, haven't you already made the trade?
Well, you placed a trade, thing, right?
So you got to let's for both. Like I do it myself, not to be political here, but this narrative that Trump is just using this as a negotiating tool. Yeah. If the market has coalesced around that view already, the trade's been made. So it can't really pump the market more than what it already has. And the market's been pumping since the first week of April, second week of April.
Well, this is the whole thing, right? This has been my song and dance for weeks now, which you and I have volleyed back and forth. The first 6 months of this year were about, okay, let's see what happens with this administration and its economic policy. You get to mid-February and the markets go, oh, well, that's not good. And then it presses and presses. There's a sell-off. You get to April, there's a crescendo, and then he backs off at the sort of 11th hour of maximum pain. And the markets go, oh, okay. Run it back.
We've already run it back.
And the only thing that you have that clearly tells you what's going on is the dollar sell-off, because the markets go, well, if you're going to put blocks for global commerce and global commerce runs on dollars, well, then there's fewer dollars that you need because there's less global commerce. Okay, right. Sell off the dollar. Like, there's just less use demand. It's like, well, if it's going to be hot out, I don't need to run my AC as much. Okay, yeah, there's going to be less commerce. I don't need so much dollar liquidity.
Okay. Right. I mean, just at the margin, incrementally, the globe shifts from being a net buyer of dollars to not needing to be a net buyer of dollars because they already have enough. They already have enough.
Yeah, as much. And so if you don't need as much, okay, dollar sells off, stocks have their sentiment thing as markets kind of understand which world they're in. But as you get into the second half of the year, that story's played.
We don't have anything to...
Now it's, okay, well, where's the economy as all of this stuff that we now understand
That's exactly where I was going.
Settles.
Yeah, where's the economy right now? You know, if we're looking for that information today or tomorrow, I suppose you could look to the claims data this week. The claims data aren't good. Continuing claims are now at a 2.5-year high. Yeah. And then tomorrow it's Canadian jobs data, perhaps a read through. How are the tariffs impacting our largest trading partner? 6C should be in focus. You and I have to talk currencies later, though, because we're out of time here for Futures Power Hour. We'll be back later for overtime today, 4 p.m. Eastern, 3 Central. But until then, we're going to take a quick break here. Tasty Live programming will continue next. Dr. Jim Schultz with From Theory to Practice. See you shortly.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show, man. Welcome to the program. And, man, I'll tell you guys something. It was so over there for a minute, but, baby, we are so back. So today, we've got a little LMNT action for the program. We snuck the final can that was in the fridge. And let me tell you all something. We've got watermelon salt today, and we've gone over this many, many times before. This is basic common knowledge at this point. This is number 4. Like, of the 4 main flavors, right, citrus, black cherry lime, grapefruit salt, watermelon salt, this is clearly number 4. But let me tell you all something. You might think that you are the star of the show. You are wrong. You might think that I am the star of the show. You are wrong. The star of the show is my wife, Autumn Schultz. She saved all the citrus and all the black cherry lime for herself. And so my beautiful, stunning, cutthroat wife, man, she took us all down and left us with the watermelon stuff, which is just not very good, but it's still absolutely delicious. So welcome to the show. I'm glad that you are here. If you're watching, we've got an extra long show today, man. So you've only got another 73 minutes of that. And then, you'll be able to go on your merry way. It will only take 70 minutes of your life that you'll never get back. If you're watching over on the Tasty Live Network, then I would actually bounce on over to YouTube. If you bounce over to YouTube, you can join the conversation, you can join the discussion, and you can troll all of my commentary and all of my stories and all of my jokes in real time with all of your brethren who are also watching the show. Man, you can celebrate. If you're a bear, you can commiserate. If you're a bull, you can even celebrate if you're a bull and commiserate if you're a bear. You can do whatever you want because it is indeed your world. So, John, bring us into the market, though, man. Market's been doing some things today, guys. Let me grab. Let's go lilac today. Let's kind of shoot from strength here. That doesn't really feel quite right, but let's do it. S&P is down 19, risk-free instrument, also known as the NASDAQ futures. Extremely high-risk product, unched on the day, now up a point. You got the boomers down 300, and you've got the Russell 2000 futures index down 12. And oh, by the way, if you have a question for me, I would drop it in the chat. The earlier that you get it in the chat, the higher the delta that I will get to that question. I know we've been having some YouTube issues pretty much all day, but we should be up and running like normal today. Huge shout out, huge kudos to the team. John and James and Ryan and Matt and Laura and just everybody that's Paul that's all working behind the scenes, working extremely hard behind the scenes to kind of get us back up and running. So thank you guys so much for doing that. And so bonds unchanged, but down a couple of ticks. You got notes down a few ticks. Got oil down 30 cents. Got UB40 down a few ticks. You got the shifties looking pretty strong today, up 21. British pound is up a little bit. Euro's down a little bit. And of course, volatility is going to be up on a day like today where the market is struggling. Volatility futures up 17 cents. Spot volatility, the old VIX, as irrelevant as she might be, we still look at her just to at least bring back some, fond memories of yesteryear. VIX up 35 cents on the day. And so, all right, so let's take a look at, the market's been, man, what'd you guys do out there? Like, what are you guys doing to this market? It's really like it looked pretty good this morning. Like it looked like, all right, let's go. We're getting right back to all-time highs. But if we go to E-mini S&Ps here, you've got let's see, is this a one-day chart? I mean, we could look at a one-day chart, that's fine. But you can see that the high, well, actually, no, let's crack into the Earl Coleman settings. Let's do a 2-minute chart. Do a 2-minute chart, like one day, that's fine. And so if I kind of zoom out, so here's your daily action for the EMI S&P. So you can see, pretty much all evening, all night, they were very strong. Early in the morning, they were very strong. Everything was looking good. And then right around 6 o'clock right there is when they peaked. And so 64.26 looks like about your high. And now you're down around 63.50. So, man, that's quite a drop. That is quite a drop indeed from the top. And so, man, look at that. You've got the market open, just sent them even lower. And now here we are just trying to find some footing, but you've got EMI S&Ps down 20 today. And I don't know why. I'm not sure what the reason is. I don't know what the data points were today or what, the narrative or the story might be to describe this. Wait, is that Errol Coleman in the chat? Hold on a second. I'm so distracted right now. Bro, you're not supposed to know this. You're not supposed to be here, dude. Like, go do something else. Like, go get your boy Gus and go do some shows, go do some shorts, go do something else. Like, we're supposed to be having these conversations in private, dude. Like, you can't be knowing that I'm using your secret sauce that I've been asking you for months now, and you just won't give it to me, so we just had to, kind of take matters into our own hands. But nevertheless, Errol Coleman in the house watching the program, and so that's kind of awesome. But EMI S&P is down 21. NASDAQ now down 12. NASDAQ was ripping, man. It was rippity-rip there to the upside this morning. And so the NASDAQ actually peaked right after the market opened. Yeah, right around 10 o'clock. And so was there a number that came out at 10? I didn't see anything today. Oh, wait, you know what? It was that durable goods. It was that Canadian durable goods estimate forecast revision. That's what it was. I forgot. It's always every, the 7th of every month at 10 o'clock. And I forgot. I totally forgot. It was not on my radar when it should be on everyone's radar. And so, yeah, I mean, NASDAQ is dropping as we speak, now down 20 on the day. And so essentially all the major indices are going to, of course, follow the same general pattern. You've got the boomers essentially doing the same thing here. Everybody kind of peaked out around, the market open, maybe slightly before, and then you've got a pretty big down move. And so, all right, so there's your market commentary. Is it going to make you a better trader? I don't know, probably not. But nevertheless, it's already out there. So let's go ahead. Let's take a look at a few things in the portfolio. And then we might do a new trade or two. And then, of course, we'll see where you guys are at in the chat. But, man, look at you guys, man. Sergio, Gregor V. Dub in the house. Man, look at you guys. Wow. Rancher's in the house. RC Mindset's in the house. Brian Dowdy's in the house. Emmett Morrison, Sam L. Man, look at you guys. Gas, man. iPod Touch. Yes, I remembered. iPod Touch said, we did it. We did what? We haven't done anything. Like, we did it. Like, my man's been talking about the apocalypse arriving on August 7th for like 2 weeks, right? NASDAQ down 31, homeboys taking a victory lap. Now, I would do the exact same thing, so I tip my cap to you, kind sir. But yeah, I'm not sure if we exactly did it today. I mean, maybe if you can get the NASDAQ down another 20, then maybe we'll go ahead and let you chalk it up as at least a mental victory. But all right, let's take a look at a few things in the portfolio. And again, don't forget, extra long show today. We're going all the way to 2:15 Central. 3:15 Eastern. And so if you have a question for me today, it would be a great day to put it in the chat because we'll try to get to a few more than we normally get to. So let's go to Disney first. I got to be honest with you guys, man. Like just some real talk here for a second. I absolutely feel like we cheated the system. Like I 100% feel like we kind of like cheated death here with this Disney position, playing this guy to the downside. Disney down again today. It was down right after the number, I think. And our little long put vertical spread is right at about 50% of max profit. It might be a couple of pennies off, but there's not really a strong reason to hold this position any longer. So we are going to be taking this guy off here on the show. And so with Disney had earnings, let me think, yesterday morning, I believe, right? Wednesday morning. So if we go to, let me go to the chart here. I'm going to get off my Errol Coleman settings because he's not supposed to know that we know this. So now that he knows that we know, we're going to have to flip into the, kind of he knows that we know that he knows situation, which is going to obviously cause us to change our actions. So if I go to a 6-month chart, yeah, you can see right there. I mean, there's your gap down on the Disney earnings. I don't know what they were. Apparently the market didn't like them, whatever they were, the revenues, the profits, the guidance, whatever, it's all made up. And so, market didn't like it. And so that makes sense. And so, I mean, it's kind of real, I guess, but on the other hand, it's all pretty made up. And so maybe not as made up as like NFP, like that's all right. Come on, guys, like for real. Like we've talked about this many, many times before on the show. And I don't think it's going to be any less made up on the other side of this new position or new person in the position and all those kinds of things. I think it's just going to be a different kind of imaginary, but I think it's going to be the same level of kind of fictitiousness that we've all kind of grown accustomed to. And so that would be my bet on all that. But Disney down a little bit from the earnings call. And then, yeah, I mean, it's really, it rallied a little bit yesterday, apparently. So try to get its feet back underneath it just a wee little bit there. But yeah, now today it's back down a couple of bucks. So a good situation, a good spot for us to go ahead and take this guy off and just be done with it, man. Like, we can go ahead and put this guy out to pasture with a little bit of profit, which doesn't usually happen for us. Normally when we're putting things out to pasture, it's with fewer profits. It's with usually zero profits and oftentimes some losses. And so the fact that we're able to kind of do this today with some kind of, my mouse is not working. That's weird. Hold on a second. Oh, we're back. Wait, my mouse is doing some weird things. Hold on a second. Okay, there we go. We're back. So let's go to close the position. 367 on the mid price. Yeah, that looks pretty good. All right, so we got filled at 367. All right, beautiful. I'll say, okay, so we're out of Disney and we move on. So onwards and upwards. All right, AMD. So AMD, okay, so this is our butterfly to the upside. Now, obviously, if you saw AMD's numbers, I think it was on Tuesday night, right after the bell. They were not good. I mean, I think the numbers were fine, but again, market reaction, it could be, a million different things, related to whatever the actual company report may have been. I mean, company report can be incredibly positive, but because they said one little thing in the conference call, or because they, my man started when he answered a question or whatever it is, like the market just sends it down, it sends it up, it can do a lot of different things. Again, I agree with Tom when it comes to this. I'm not sure if you had the numbers beforehand that you could make money the next day consistently. I really don't know that you would know where the stock is going. And so, I really think tapping into the randomness and the unpredictability, just in kind of an accelerated way when it comes to earnings, I think that makes a ton of sense, just in the grand scheme of things. But for AMD though, if I bring up my chart, you can see that, yeah, I mean, it was not amazing, right? So you can see the gap down here, but man, we got a little bit of something today. I mean, obviously, AMD was up to 175 earlier today when the NASDAQ was so strong. And so now the NASDAQ has sold off. I mean, now it's down about 50. And so it's actually weakening here as we speak. But AMD is really hanging in there. So AMD is hanging in there. We've got 1 day to go. If you go to the positions tab here, you can see that it's marking for, about 27, 30 cents or so. We paid $4 for it. I don't really see a good reason to take it off at this point. Like, I'm like, all right, you could take it off and you could close it down and save your 25 or 30 cents. But I'm like, man, I mean, we've already absorbed the maximum loss. The pain is not going to increase too much from here. And so it's like, man, if this thing comes back tomorrow, even later today, which it absolutely could. I mean, we only need this thing up over, 177 and a half to really start to bring this position back. In fact, the break-even point here for tomorrow is just going to be, the strike on your bottom call for an upside call butterfly. So it's 177 and a half plus whatever you paid for it. So 407. We'll just call it $4 just to keep the numbers nice and round and easy. And so I don't have to text, Julia Spina to help her or to have her help me out with this. But 177 and a half plus 4 is 181 and a half. Again, you can never be sure, so I'll put the approximation symbol, but I think that's pretty close. So my break-even point here is only $10 higher. $10 is a significant move, don't get me wrong. But again, we're talking about AMD. This is not Procter & Gamble. This is not General Electric, right? This is not, Intel, right? Although Intel, I think, is moving a lot lately. This guy can absolutely move and do some significant damage in a short amount of time. And so speaking of damage, I mean, NASDAQ down 70 now. It is falling. So maybe iPod Touch was right. Is today the apocalypse? Man, I thought it was last week, but apparently I missed it by about a week. And so 181 and a half is your break-even point on this butterfly. And so let's sit tight. Let's just see. I mean, again, the content tomorrow is not going to write itself, guys. Like, we need a little something, especially extra long show tomorrow too. Like, we're going all the way to 2:15 Central, 3:15 Eastern tomorrow as well. So come back, bring your questions, bring your friends, bring your family members, and all of that stuff. So, all right. AMD, we do nothing. And then as far as the other positions, I mean, Chipotle is down. That makes sense. But again, look at our option, man. It's hanging in there as predicted on this very program. Like, as we talked about on this show, I said, hey, I don't really think there's a high likelihood that we get assigned on this position, even though the extrinsic value is hovering around 0. I think there's a lot of time left in the position. I still think that, assignment is not super likely. Now, is assignment more likely than if we had a lot of extrinsic value in this position? Of course. Like, we could very well be assigned on money. That would not surprise me in like a huge way or anything. But with still a lot of time left in the position, even with no extrinsic value, I still think the likelihood of assignment, it's more likely day in and day out that you're not assigned than that you are assigned when you still have 50 days to go, 40 days to go, whatever. And so if we get any type of rally in Chipotle, like if the 3-day-old chips can save us, which I don't know if anyone's ever said that in the history of, Chipotle commentary, but if they can really come through for us, then man, the extrinsic value is just going to naturally lift up. It's going to naturally rise, which is going to help to give us some kind of, some kind of shield, some kind of buffer against getting assigned. But again, if we get assigned, it's not that big of a deal. It's not that big of a deal for 2 reasons. Number one, we've made our peace with this position. I've already said, like, hey, I'm fine holding this position. We can inventory this as just some long stock and just kind of play the upside for, however long it takes, essentially, until we're either A, profitable on the position, or B, we just get tired of playing the upside, which we're kind of getting close to that point with Best Buy. But, the P&L Open Bros, they're doing some things to me mentally and emotionally even. But with Chipotle, we'll play it to the upside. So if we take the shares, we take the shares. But then also number 2, and this is an important piece to the puzzle as well, it's only a $40 stock. So remember, when you buy stock in a margin account, you are going to have to put up half the notional value of the position. So if Chipotle is $42 a share, and obviously every option contract is 100 shares, the total notional value of the contract is $4,200. Well, if I'm in a margin account, which we are in this account, I'm going to have to put up 50% of that. So it's going to cost me a couple $1,000 to hold that position. A lot more than it's costing me to hold the short put, of course. But it's not like I'm taking assignment on Tesla, a $300 stock. It's not like I'm taking assignment on Meta, a $700 stock or whatever. So now it's going to do, significant damage to my buying power and the other things that I might, want to do. It might take up all my buying power. My buying power might flip negative temporarily. Like, these are problems you would have to obviously address in the moment. But the fact that, I could be in a situation where, I could go ahead and just hold these shares for, the reasonable future without a huge hit to the buying power overall in the account, I think that's really, really helpful. And it's a beneficial thing to remember. And so just be mindful, when you have an in the money put or any in the money option, specifically an in the money put, I guess, and you're worried about taking assignment, you're like, man, this is going to completely like upset the apple cart or whatever. Just, just obviously just pause, 10 seconds for station identification. And then when you come back, it's like, all right, what's the buying power effect going to be? What's the basis on the position? Like, I think those things can really kind of help to, just kind of recenter you around, what's actually going to happen. So all right. So Chipotle, there's a little bit of commentary for it, but the other positions, Palantir's actually working out okay. That's fine. We got a nice little rally in Starbucks. Look at Starbucks, the flight to quality, right? The very common known flight to quality that is Starbucks. I mean, that makes sense because no matter what happens, even if iPod Touch is right, and today is the apocalypse, as the NASDAQ is now down 80, so maybe he is right, people are still going to want their C plus coffee. And they're going to want it as consistently as they've ever wanted it. So Starbucks, again, they've got the business model that we're all kind of, hoping we had, where they've got a pretty below average product that people still keep buying it kind of day in and day out. So there's Starbucks. And I think everything else, we're just going to sit tight and kind of do nothing. All right. So what I want to do though, let's go ahead. I want to do one new trade today. At least one new trade today because volatility is up today, right? I mean, you've got volatility futures now up over 18. You've got the VIX now up to 17 and a half. And so the market's on the move, man. I mean, you've got, NASDAQ down almost 100 now. And so it's like, all right, there's some things that are definitely happening out there. So let's go ahead and let's go into one of the major indexes. The IWM will be a good choice because when you think about the major indexes, SPY, QQQ, DIA, IWM is going to be the lowest price of the bunch. I mean, if we just look at all of them really quick, SPY is what, 630, right? QQQ is what, 500, 560, right? DIA is, 450 or whatever, 440. Then you go to IWM, the Russell 2000, and it's only 218. So this is going to be a much easier trade from an undefined risk standpoint, given different account sizes. So it's like, I'm going to do an undefined risk position in this in just a second. And so, if you want to do something undefined risk in one of the major indexes, it can be challenging if you have limited capital because selling a strangle in SPY is just going to be too much buying power. Selling a strangle in QQQ is just going to be too much buying power and so on and so forth. But you go into IWM, it's like, all right, we might be able to fit a little something in a portfolio that's maybe, only a modest amount of, capital. I mean, we've got 30,000 in this account and I'm going to show you guys how we're going to be able to fit in a strangle, basically within our position sizing parameters. We might have to stretch the truth just a wee little bit, but that's why the truth is there, to be stretched out a little bit. So September 19th, 43 days to go. If you go in here, 43 days to go, you've got the stock at 218, maybe 218 some change. I'm thinking let's just do a 20 delta strangle and let's see what that looks like. You could play this thing directionally. You could be bullish. You could be bearish. You could play this thing either side. I'm like, I don't know, man. Let's try to be at least a wee little bit strategic today. Like, let's try to be, we've obviously taken our directional shots in Disney. We've taken our directional shots in, Caterpillar, AMD, whatever. Let's actually try to get back to, home base here and start maybe selling both sides of the market. Like, let's just say, hey, let's play some time. Let's play some volatility. Let's kind of get back to, the roots and the real advantage to short premium, which is not needing to be directionally right, which of course you still have all those things with a short put, even a short call, whatever. But with the, the classic prototypical Betty Crocker short strangle, you've got it all, man. Like it's all right there. It's definitionally a neutral strategy on entry. And so let's see if this guy will set up a little bit. So if I sell a 20 delta put, so I go to the put side, I'm looking at my 20 delta, which is right there. It's going to be your 203 strike. So I'm going to sell that guy on the put side. So let's go ahead and let's delete that. I sell my 20 delta put on the put side. I'm going to pick up a couple bucks for that. And then let's mosey on down to the call side and let's do the same thing. So this side, it's going to be, if I sell a 233 call, it looks like I sell a 233 call. I'm going to pick up about $1.80 for that, which is right there, of course. And this is going to essentially be a very, very neutral strangle. In fact, you can see it for yourself. The delta on the overall position. This is a 203 put, 233 call strangle in IWM for my audio only crowd that might be out there. And so 203, 233 for a little bit over $4 on this position. The delta is -1, so it's basically neutral. My pop is 68%, which is looking good. My P50 is 85, so we can round that up to 100 for our mental records, even if not for our actual records. The max profit, that's probably not a good idea for the actual records. But max profit, 406, of course, that's going to be the credit that you collect. Max loss, negative infinity. You would need IWM to print positive infinity to achieve negative infinity from a max loss standpoint. I'm going to say that's not necessarily very likely. Buying power effect, $2,900. Okay. So usually, 30,000, I like to stay between 5 and 7%. 7%, or 3 and 7%, I should say. 7% of 30,000 is 2,100. This is a little over 2,100, right? So we're getting close to 10% of the account. Okay, so a couple of things. So number one, right? Because you yourself out there, it really doesn't even matter how much capital you have in your account. You're going to run into situations where you set up a trade, you like it, you need to figure out, all right, like, I like everything about this trade, but the buying power is not quite fitting my position sizing parameters. What can I do? Like, are there things that I can do? There's a couple of things that you should consider. Number one, before you go to adjust anything, so before I go to like fiddle with the strikes or widen it out or whatever, which is what we're going to look at here in a second, I would actually stop and pause and I would say, all right, this is going to be an undefined risk position, but it's an undefined risk position in what? Like, what is this an undefined risk position in? And essentially what I'm trying to figure out is this an index or is this an individual stock? Which of course is a very, very simple question to answer. That's only going to take you a couple of seconds to, kind of arrive at kind of where you're at. Like, which road on the fork in the path did you take? Did you go index or did you go individual stock? The reason why that's important, in my opinion, is there's obviously a lot more risk with individual stock. There's a lot more, idiosyncratic risk. There's a lot more kind of, unsystematic risk where, you're taking on all this firm specific risk that if something crazy happens, like an Elon tweet, like, CEO stepping down, like whatever, something crazy happens, then all of a sudden, that stock may take a big hit one way or another when the overall market's not necessarily doing much either way. Now, of course, there are plenty of days when the overall market does a lot either way, and the individual stocks all follow suit. But generally speaking, just start to finish, you're going to have a smoother go of it. You're going to have a smoother time when it comes to indexes. So the reason why I bring that up here, if this was an individual stock, so if this was like Tesla or Nvidia or even Disney, Bank of America, whatever, I would be much quicker to say, all right, how do we reduce that buying power? Like, we can widen the strikes, we can even flip over to define risk, whatever. But how do we reduce that buying power? Because this isn't an index, and I'm not even talking about like a crazy index, like some international index or some index that's not widely followed in the market. Like, this is one of the, this is one of the four horsemen of the apocalypse, which according to iPod Touch is today, right? And again, NASDAQ down 87, so maybe he's right? But you've got S&P 500, NASDAQ, Dow, Russell, like it's number 4 of the four horsemen. It's basically your watermelon salt of all of the major equity indexes, at least in the United States. Because of that, we could just roll with this trade, in my opinion. We could just go with this trade. Now, I'm going to show you guys a couple of things, like how to widen the strikes and how to do different things to maybe reduce the risk if you find yourself in a situation where that's what you want to do. But, I just want to make it very clear that if I'm in an index and I like the way everything sets up, this is a situation where I'm a bit more apt to say, all right, I may not be within 3 to 7%, but I'm at 9.5%, right? I'm not at 15%. I'm not at 25%. Like, it's not that crazy that I think it's probably going to be okay. Right? Obviously, famous last words. It's probably going to be okay. And so let's go ahead and let's close down this. Let me delete those drawings though. Let me show you guys, if you wanted to reduce the buying power by widening out the strikes, what might that look like? Well, it's actually, it's exactly the way that it sounds. All I would do, like if I widen the strikes out 3 points on both sides, let's say, which basically moves it from a 20 delta strangle to a 16 delta strangle, I could go down to the 200 put from the 203 put, and then I go from a 233 call to a 236 call, and you're going to see the buying power has dropped, right, by about the amount of width increase that we added to the position. And so now my buying power is only $2,600, right? My pop has increased, right? Gimme. Buying power has decreased. Gimme. Right? Credit collected has decreased. Gotcha. Right? It's always there. It's always somewhere there. Like, you have to seek it out. You have to search for it, and it will find you if you keep looking. And so this is what you could essentially do when it comes to a strangle. You set it up, you like it, but it's a little bit too risky from a buying power standpoint. Just try widening out the strikes. And then you may find yourself kind of getting it more closely aligned with whatever your position sizing parameters might be. Now, for me, I'm going to go back to the 20 Delta Strangle because I do like collecting a little bit more on this trade. And so, again, 9.5% to me is not super crazy. And so I still feel pretty good about that. So 203, 233 for about $4. Let's try to get filled on this. And then we'll kind of, man, maybe we'll see what's what with you guys. Yeah, we're about 30 minutes into the show. I would say that this is a good time to do it. Let's see, 401. All right, so we got filled at 401. So there you go. So we did an IWM strangle on a day where volatility is up. The NASDAQ catching a little bit of a bid here, now only down 55. And so again, if we get enough computer restarts out there from you guys, we can turn this thing around with the quickness. But it's in your hands. Like it's, your destiny is in your own future. Your future is in your own destiny. Your future and your destiny is in your hands. Let's go with that. I think that's what I was going for the entire time. So, all right, let's see. Where are you guys at? We got Errol Coleman watching the show. Man, look at you guys. Look at you guys. It's crazy. All right, where are you guys at? Let me see if I can let me try to surprise and delight somebody in the middle. Well, I do see that Griffin Jones is saying, "Hey, tell Dr. Jim to change the battery in his mouse." No, it's plugged in, man. And plug in and use the backup wire. No, this is wired. I'm not a wireless mouse, bro. Like wireless mouses, like you're just asking for a problem. You're asking for a huge problem. No, it's wired in. Like you can see. Can you see you guys can see the wire right there. No, it's wired in. And so I think this mouse it's been great to me. I've had it for like 4 years though. It's kind of starting to maybe run out of juice a little bit. And so it might be time to just, kind of swap it out for a new mouse. But no, you got to go wired mouse. I mean, the gaming bros taught me that. And we're not gaming. We're doing things far less important than gaming, of course. But the gaming bros, they know what's up. They know what's up with laptop selection. They know what's up with mouse selection. Like you never go wireless, man. It's too much risk, right? I prefer to save my risk for strangles than IWM, not wireless mouses. And so, but let's see. Let's do let me see if I can find somebody else I can surprise and delight? Let's see here. I don't want to spend too much time. Let's do Tasty Live is I'm gonna go back to the beginning. All the way to the beginning. There it is. Okay, so I got Griffin in the middle there. But let's see, where are we at here? There we go. Sam L's in the house. What's going on there, Sam L? Spider for our trades, coach for our Pinot, and king of the fade. Yes, king of the fade indeed. Not the hair fade though. We'll probably go back to that at some point. But we're kind of going with the primitive look for a bit, at least a bit longer. But Doc, not messing around on those hack squats. No, I try not to, man. Man, I got DOMs just from watching your flawless technique. Feel like a masterclass in pain and game. I appreciate you. Posted a video about my hack squats on Twitter for those of you that might follow me on Twitter. If you don't follow me already and you want to, at JSchultzF3 for a shameless plug on my my Twitter feed. But yeah, from time to time we post some training videos, and I think I'm going to compete again next year, so we may actually be amping up the frequency on those training videos. But yeah, hack squats for my money, man. When it comes to it, if you're looking for a squat variation where you're like, man, I'm all buffed it up, like I'm all banged up, I got old man joints, I got this, I got that, I got knees, I got backs, I got hips, I got glutes, I got hamstrings, I got whatever's. Man, the hack squat is probably going to feel pretty good. It's probably going to feel pretty good because it allows you to basically, put all of the emphasis on the target muscle, which is usually your quads on a hack squat, without having to, endure all the other niceties that might come along with a squat, like, lumbar load and spinal load and things like that. So Emmett's in the house. Yes, the YouTube stream did go down. They were streaming on the website. Yes, of course. Always streaming on tastylive.com. So, if the YouTube thing is ever down, guys, go to the mothership, man. Like, go to the motherload, which is tastylive.com. So that's where it obviously all began, and that's where, you'll always find the show. So if, modern technology fails us, which it was a YouTube issue, if I'm not mistaken. If modern technology fails us, then just go back to the mothership, man. Go back to home base, which is tastylive.com. But Sam L says, Doc, Pins earnings tonight. Who's even still using their app? They're still in business, man. Miracles do exist. No, miracles absolutely do exist. There's no doubt about that. Let's see, like my boy Forrest Frank broke his back. He's healed in like 2 weeks. That's crazy, man. That's some crazy stuff. If you don't know who I'm talking about, look him up and you'll see exactly what I'm talking about. But let's see, IWM pins. Wow. Seriously, they're still in business? That's unbelievable. Like that's really amazing. Especially in August. They should just like they should run their operation like a Christmas tree joint. Like they should run their operation where it's really just October to January. And then just shut it down, man. Just turn off the lights, send everybody home, right? You really only need the 3 months around the holidays. Like where people are searching for blueberry cobbler, where people are searching for like whatever. I mean, I've heard people say that you should start using Pinterest for like finance. You should start using Pinterest for like options content. So for you Pinterest bros and brosets out there, I may be sneaking into y'all's feeds here pretty soon with some options advertising on Pinterest. I think I'd be the only one on there. So from a first to market kind of first mover advantage, then I'll get all those 65-year-old women involved in options, and that would be good. That would be amazing. Because again, we just need bodies in the seats, man. We're just looking for heartbeats. And so PINS, let's see here. If I go to PINS, $38, $39. Let's see. If I go to yeah, I don't know. They've got earnings tonight. Maybe we do a little something. I don't know. I don't know. Can we splash around a little bit? I kind of feel like the fact that they're still solvent surprises me. And so I'm kind of like, why don't we just, if you can't beat them, join them. Like if you can't beat them, join them. Like, let's go ahead and play this thing, to the upside. And so if I go to, what if we buy a 38 and sell a 40? Just keep it real simple, man. Real simple, real small. Again, a little something for tomorrow. It's just a little something to grease the wheels. Let me think, what is tomorrow? Is tomorrow leg day? I actually have to make a decision. Tomorrow is either chest and back or legs. It's my choice. And then whatever I don't do tomorrow, I do on Saturday. And so I don't know which direction I'm going to go because I did delts and arms today. And so I'm like, if my upper body needs an extra day, I may do legs tomorrow. I probably won't know until the morning. But either way, yeah, this will give us a little something to kind of grease the wheels for the show. So it could be like a light warm-up set of like, chins if it's chest and back day. Could be a light warm-up set of like extensions if it's leg day. But 38.40 for 97 cents. I mean, I like it, man. I like it. And again, of course, if you haven't seen the show before and you're brand new, welcome to the show. Welcome aboard. I really hope that you stick around. I hope you get some value from the show. Maybe get some laughs, maybe get some smiles, maybe even learn a couple things about options. That would also be obviously beneficial. But if you are brand new to my show, as everyone can attest to in the chat, guys, back me up on this, you should be doing the opposite of all my trades. Probably all of my trades just across the board writ large. But we got filled on Pinterest. All right. But definitely my earnings trades. So earnings trades, don't let the confidence, don't let the conviction, don't let the chutzpah fool you. Like do the opposite, and then you can make some real money. So Pinterest, we're playing it to the upside. So you should be about as bearish as you could possibly be. So let's see. iPod Touch, yes, iPod Touch, August 7th. I don't know, man. It's not really holding for you. But if I were you, I would have already banked the victory lap. You got your 30 basis points in the NASDAQ. And so that's about as much as we can hope for these days. And so that's essentially 1987. And so nice call, my friend. Let's see. Gasman's in the house. What's going on there, Gasman? Appreciate you. Emmett's in the house. What's going on there, Emmett? Man, I appreciate you so much. Tony Brandt says, anyone messing with Fly? Is that a stock? FLY? It's a great ticker. Firefly Aerospace. Wow, up $17 today. Okay, so it's obviously in play in some capacity. I don't see any earnings that happened in the stock. If I go to the trade page, they don't have any options yet. Okay, I'm going to pass on Fly for now. Is this a new deal? Is this like a Figma thing? Figma has options though now, right? Fig? I think it's Fig. Yeah, ooh, look at Figma with some options. $79 stock. It's pretty, yeah, okay. I mean, the markets are not that great. I'm assuming the buying power here is really significant. I'm on Figma now. I've migrated away from Fly. Yeah, I'm essentially getting fully margin on this. And that kind of makes sense because I think the stock IPO'd on like Monday or something. Like it's very, very new. And so it makes sense that you're not going to get any margin relief until, things kind of settle down. This is probably very similar to, well, I mean, it's not GameStop for 2021, but it could be similar, right? I mean, if the Wall Street Bets bros get a hold of this thing, I mean, it could be 300 down to 0, back to 300, back to 5 in the same day, like in the morning session of a given day. Like that could absolutely happen. And so look at the IV rank at negative. Look at this. Have you guys ever seen this? Hold on. The IV rank, I've never seen this before. Have you guys seen this before? The IV rank is negative 324. Like that, I don't know if that's a typo. I mean, I know that Dr. Dad is doing all this by hand and then shipping it out onto the platform. So maybe he kind of made a little laboo-boo there. But down negative 324 on the IV rank. Wow, that's really, really crazy. If I go to, hold on, I clear this away. The mouse is definitely sticking. I might need to get a new one. Let me look at the IVR chart. Fig.ivr. Wow, look at that. That's crazy. And yeah, it looks like we've only got, like if I do like the week, like a 5-day chart. Yeah, I mean, I can't even really, it's all scrunched up on the end there because, I mean, yeah, wow, look at that IV rank. That's nuts. That is absolutely nuts. And so just so much volatility has come out from the stock. I mean, the volatility, the IVR today, not the IV, the IVR today is down 600%. Just because, all of the juice kind of came out of the balloon. Juice in a balloon? Yeah, sure, it's a Thursday show. It's an extra long show. You put a little juice in your balloon. That's fine with me. But Figma, yeah, Figma's really, well, it's really something. So I'm going to pass on Figma. I'm going to pass on Fly too, because there's no options. And so, but thank you there, Tony Brandt. I appreciate you, my friend. David Gallimore, oh yeah, talking about the YouTube stream being down, but we're back. RC Mindset's in the house. What's going on there, RC? I appreciate you. My friend says, let's go, Dr. Jim, man. Let's go. Let's do it. And Emmett Morrison says he needs a nap, but he's not a boomer. No, Emmett Morrison's just young. He's a young, spry guy. I met Emmett at the Chicago event a few months ago. And so I think Emmett's younger than I am. And so, although I'm pretty close to being a boomer, so I'm not sure that I'm a good reference point there. Let's see. Brian Dowdy. Hey, Dr. J, you're a great teacher. Man, I appreciate you. Man, I appreciate you. I don't like doing the opposite of you. It feels so disrespectful. Yeah, but it's all about this is about making money, man. This is about making money, right? This is not about learning. This is not about teachable moments. It's about making money, right? Now, when we're talking about like extrinsic value, or we're talking about like, and we may start getting back to some of that, like kind of bringing some more educational stuff onto this very show. I don't know. I mean, the way that we do the show is amazing, where it's like live trading and then the interaction, like it's incredible, right? But we may start mixing in some more like, let's get a slide up there. Like, let's do something, just to kind of, especially for all the new people that find us. There's so many new people that find us, right? And it's like, I want them to be on the inside of the inside jokes. And so we got to kind of coax them in, right? And so, but when it comes to extrinsic value, intrinsic value, implied volatility rank, Brian, I mean, we can be on the same side, and then you can obviously fade every single one of my actual trades. That would be good. But Brian says, feel so disrespectful because I look up to you for guidance now. Man, I appreciate you so much. Why do you love butterflies? How do I do the opposite? That's good. That's good. Because you put that right at the end. I wasn't ready for that one. That was good. Nice troll, my friend. That's solid. That's very solid. Man, you guys always step up, man. Always step up with the solid trolls, especially when you plant them at the very end like that. I'm not ready for it. That's great. So why do you love butterflies? Okay. So a couple of reasons. So number one, if you notice when I use butterflies, it's almost always associated with some type of binary event. So it could be an earnings call, it could be FOMC, whatever. I mean, you can fill in the blank with whatever there. To take advantage of the move from that binary event, a butterfly sets up really nicely because A, it can be relatively cost effective. It can be relatively cheap, and you can get a relatively wide butterfly for something that's relatively cheap. And so we're talking about a couple bucks, whatever. It's obviously all going to be account size dependent, but it doesn't have to be a big trade. It can be a very small trade. But the nice thing about the butterfly is if you actually do get the move that you're looking for, you can make multiples of the debit that you paid. Right? Like it's not that uncommon. If you've seen the show, and I know you have, Brian, you've been around for at least a couple of years now, I think. And so you've seen it happen, like where we've done SPX butterflies, we paid $5 for them. We got out the next day for 18 or 20 or whatever. It doesn't happen that often, of course, but it does happen from time to time. And that's really nice because, if you can clear some 2Xs and 3Xs, like here and there, it really kind of helps to, soften the blow of the inevitable losers that you're going to have. When you do a vertical spread, that's a great trade too, but now you're never going to get more than what you paid for it, essentially, if you do an at the money vertical spread. Like if you do an out of the money vertical spread, I suppose you could maybe muster that up, but it's going to be a lot more challenging to do that. Now, of course, it's gimmies and gotchas, right? Because with a vertical spread, you just have to get the direction right and then you make money. With a butterfly, expected move butterfly, the way I like to do them, you have to get the direction right and the magnitude of the move right. You have to get both of those, kind of numbers in the combination lock to finally kind of unlock that guy. You can't get away with just having the direction or the magnitude. You have to hit both. And so obviously, the multiplicative nature of the profit potential comes at a cost. Like you have to pay for that in some regard. And the lower probability is one of the ways that you pay for that. So how do you How do you do the opposite? Well, it's actually pretty simple. All you do, because with the expected move butterflies, I'm usually directional. It's very rare. I can't think of the last time that I've done like a neutral butterfly. Like I'm kind of thinking, all right, what side of the market do I want to play the stock on? Like, do I want to be bullish? Do I want to be bearish? And of course, I give you all the reasons why I want to be bullish or bearish on that stock. Oftentimes there's only one or maybe a half of one, but I give it to you. Then all you need to do is the same strategy on the other side of the market. That's it. Don't sell the butterfly. Don't do stuff like that. But all you have to do is do the same strategy on the other side of the market. And boom, there you go. So great question there, Brian. And an outstanding troll. And so RC says, yeah, the YT stream crashed earlier. Yes, the team got us back up and running though. Sergio's in the house. What's up, Sergio? Rancher's in the house. What's up, Rancher? Brian, it does not seem like it's a consistent way to generate positive returns to butterflies. Yeah, I don't know. I don't know. I haven't kept stats on it. Maybe I should do that. I don't know. I haven't really kept stats on like specific strategies, like what strategies have been, the most profitable for me, this year, all time, like thing. I haven't really looked at any stats like that. And so that would be an interesting thing to know though. That would definitely be an interesting thing to know. But I mean, all of my trades are on the follow page. And so you could, like, if you really wanted to know, like you could go back and you could figure out on the follow page, like, Dr. Jim or Tom or Tony or Liz or Jenny, whatever. It's like, all the vertical spreads are X, all the strangles are Y, all the butterflies are Z. I think we've actually done pretty well on butterflies this year. I know we've recently lit some stacks of cash on fire, which is not that uncommon. But I think when the dust settles, I actually think we're doing okay. I think we might be, somewhat green on just butterflies alone. And so for me, though, it's, it's not the meat and potatoes. It's not the peanut butter and oatmeal. It's not intended to be. And so again, I'm not trying to, turn something into something it was never intended to be. I think that's, it gets back to knowing what you've signed up for. It's like, all right, what have I signed up for? I've signed up for, as my foundation, I want to play high probability, I want to play high volatility, and I want to do it, in more of a normal kind of setting that's not necessarily associated with binary events, that's not necessarily associated with earnings. It's more of kind of like a, your regularly scheduled trades, if you will. But there are so many opportunities with binary events. There are so many opportunities with earnings. I'm like, all right, let's just give it a shot. Because, I mean, honestly, it's fun. It's fun, and we're allowed to have some fun, right? And you might even make a little bit of money. And so that's essentially what's happened to us, I think. But some of you are like, hey, I'm not looking to have fun. I'm looking to make money. And I can respect that 100%. So Sam L's in the house says, Doc, a full 75-minute mental AMRAP. We'll never get back. That's correct. It's mental and it's even emotional at this point. Felt like a burnout set for the brain. No reps counted, just vibes. P&L swings. Yes, 100%. This is an AMRAP for the program. That is 100% true. And for those of you that might not know what AMRAP stands for, that is as many reps as possible. So that is a set that you would take to failure. And I can assure you, we are going to reach failure right around 2:15 Central in just a few minutes here. And so Joel James, what's going on there, Joel? Dr. Jim, help. In an LLY put credit spread, I'm short the 720 long, 700 put. Okay, you're short the 720. You're long the 700. 43 days to go. Put on a week ago for $400. Now I'm upside down by $1,100. I plan to let it ride, but 6% of the portfolio, so it burns bad. Okay, thoughts? Yes. Okay, this is great, and thank you so much for all the context. It's very, very, very helpful and kind of needed. So for Joel James, let's see here, LLY. LLY, down $100 today. Wow, what happened to Eli Lilly? Man, did something come out with one of those weight loss drugs? Help me out in the chat. Did something come out with one of like the GLP-1 guys? And so, wow. I mean, I don't know. I haven't heard anything. So I'd be just curious to know. I mean, that's a huge move, man. That's a huge move for Eli Lilly. Or is this related to like, hold on, what's like Pfizer doing? Yeah, Pfizer's up today. And then like Moderna. What is Moderna? Is it mRNA? Yeah, that's right. Yeah, okay. So it must be Eli Lilly specific. I was trying to figure out if it was maybe like tariff stuff, because I know there's a lot of tariff stuff going on right now with Big Pharma, but that does not appear to be the driver for Eli Lilly specifically. Okay, so what do you do? Okay, so here's the first thing. This is a defined risk strategy. So the choice to do nothing is always there. It's always there. Now, thank you for sharing your sizing. It's 6% of your account. Okay, so you're a little bit on the higher end, right? We typically like to be 1 to 3%. I mean, you're maybe not even on the higher end, you're above the higher end by, a magnitude of maybe 2x, right? And so that's obviously important to understand here. You are in, you have 43 days to go. So you have a ton of time, a ton of time. So right now, you are, let's see, this is the trade that you have on. You're in September with 43 days to go. You have a 700, 720 put spread. You're short the 720, you're long the 700. It's selling for 17 bucks. Right. You collected 400. So yeah, you're upside down by about 1300 bucks now. Okay. So here's a couple of things to think about. Number one, you only have another 250 bucks to lose in this trade. So you are already almost at maximum value. So, I mean, it literally can only get another 200, 250 bucks worse than it currently is. So you've essentially reached the maximum pain point already, which can happen when you have a vertical spread on and you're just dead wrong on the direction. The stock falls out of bed, which is exactly what happened to you right here. And so for that reason, that's kind of a point on the side of staying in the trade because it can't get much worse. Like it can't get much worse. And I know today's things, and I know it's like, man, like what can I do? What can I this? What can I that? But the thing to remember is it can only get a couple $100 worse. It would be very different if I pulled this up and the mark price was, oh, well, hold on. It's bouncing around a lot. The markets are super high. Hold on. Let me try to get you some accurate. Okay. So the mark price is $16 now. So, okay. So that leaves you like, now it's 17. Let's see here. If I go to, hang on, let's see if we can figure this out together. We've got plenty of time. If I go to the other side of the market, 700, 720. Okay, so if you look at, so here's a little trick for you guys. So this is going to help. And I'll get back to answering your question too in its entirety. But if you look at this, if you look at these markets, right, they're like $2 wide. So if you look at these markets, they're like $2 wide on the 700 strike put and the 720 strike put. That's very, very wide. And when you look at, the mark price down here, it's bouncing all over the place. It's $17 and then it's $17.30 and then it's $16. It's like, man, what is the actual price of this strategy? Okay. When this happens, which is not that uncommon for deep in the money options, one thing you can do, it's a neat little trick. And I learned this from Tony Batista, actually, which most of the things I learned from Tony Batista, I quickly discard. But this one was an actual keeper. If I go to the other side of the market, so the call side, and I go to sell, it doesn't really matter, kind of which side, which one you buy and which one you sell. It doesn't make a difference. If I look at the same 20-point wide spread, but now I'm on the call side, you're going to notice that these markets are way tighter. So now these markets are only about 30 cents wide, right? Which is still, I mean, it's not the penny wide markets that we've come to know and love with like an SPY or AAPL, but it's still very, very helpful. So why am I doing this and how is this going to help me? Okay, when I look at the price now of the call spread at 380, let's say, I know a couple of things. Number one, the markets are way tighter. So that price is going to be a more accurate reflection of the actual mid price of this spread. And also B, the extrinsic value of, or I should say, this strategy is 100% extrinsic value because it's out of the money, right? So now I'm on the call side. The stock is down at 600 something. I'm looking at a 700, 720. This is purely extrinsic value. Okay. Because of put call parity between the calls and the puts, and like dividends kind of muddy this up a little bit. And so it's not always this clean and this simple, but it has a kind of a quick and fast way of figuring out what the price is approximately on the put side. You can say, all right, the extrinsic value on the put side should be about $3.70. So chances are that is what you have left to lose on the put side by looking at the call side. And so because, again, the extrinsic value, essentially, if you stay in the trade right now, it's working against you because it's fully in the money. Like when you sell an out of the money spread on entry, the extrinsic value is working for you. When that spread finally goes in the money because the stock went down by a lot, like with the situation you're in right now the extrinsic value, it's going to essentially hurt you if you stay in the trade. Which isn't to say you shouldn't stay in the trade, but just so you understand what's happening and kind of why it's happening. And so for that, you just take the 370 extrinsic and deduct it from the $20 max width. And that gives me, so the price of this is probably about $16.30. Like if I went to get filled on this spread, it's probably right around $16.30. And so the $3.70 though, that is what you have left to lose in the trade. All right, that's a little bit more than 250. So now, I mean, it's 50% more than kind of what I thought it was. So what should you do? Well, a couple of things. So number one, and the first of which is kind of a recap. This is bigger than you probably should be with defined risk. So for that reason, I would probably, kind of move closer to maybe closing the trade now and taking the loss and saving the $375 because again, I mean, you need Eli Lilly up 60, $70 for, this thing to get, back to right side up, which it certainly could do. But because you are bigger, if you were at between 1% and 3%, even 4%, I would definitely want to stay in the trade. I would definitely suggest, doing nothing and sitting tight and saying, hey, let's see if the, next 43 days can't bring this position back for you because it is bigger and there are some rather significant savings if you close the trade today. That kind of leads me down the rabbit hole of closing the trade today. If you wanted to stay in the trade, though, obviously, Joel, I mean, that's my default setting for all of defined risk strategies. You have a defined risk strategy on, it doesn't work. What do? You don't do anything. What do? You sit tight and you just give the stock, you give the position a chance to work. You give the probabilities a chance to play out the probabilities that you had on order entry. I mean, when you put this trade on, Eli Lilly was obviously much, much higher because it's down a ton today. And so the probabilities on entry were such that, 57% of the time, this was going to have a pop of, or this was going to have some profit of at least a penny, right? That includes all of the crazy drawdowns that you're seeing right here, right now. Now, you could make the case, hey, Jim, it's a different scenario. The probabilities have changed. I've got to update. I've got to, do some Bayesian updating or whatever, and I want to get out of the trade now. That's totally fine. And so it's really your call. I've obviously given you things to think about on both sides of the fence. This is not a clear-cut issue, in my opinion. This is very gray. This is not really black and white. And so hopefully, this gave you a couple of things to think about, though, to help you make a good decision. So great question, though. Thank you so much for bringing that to our attention there, Joel. And so Emmett says, let's talk a broken wing butterfly today. Man, I haven't done a broken wing butterfly in a while, Emmett. It's been a minute. We've done IWM. We've done Pinterest. Man, let me think here. Can we do something maybe like SPY? Another major market index? SPY, what's IV rank? 17, okay. What's QQQ? Yeah, we'll do a little broken wing butterfly. QQQ 16. Where are the boomers at? DIA 12. It's brutal. Let's see here. What about Apple? Well, we already have a position on Apple. Hang on, let me scroll down here. What about like Baidu? I'm not trading Baidu. Let's see here. Microsoft. What about Microsoft? Could do a little something in Microsoft. Oh, IV rank is 7. Wow, this is brutal. I don't know. I mean, it might be difficult. It's hard to find IV ranks that are not putrid. It's kind of the best way to put it. What about Tesla? 5? Man, it's we're in the hurt locker if the Tesla IV rank is 5. Man, wow. What's NVIDIA? Like 0? Like -6? Wow, NVIDIA's 20. Okay, hold on. We may have found a candidate. Do they have earnings? Yeah, they have earnings in 3 weeks. I can't do it. Maybe we'll do one. So, Evan, remind me for NVIDIA earnings. Maybe we'll do a broken wing butterfly for NVIDIA earnings. And so maybe we'll do that. Maybe we'll do one before that. But remind me when NVIDIA comes up here in 827 or on 827, I should say. And so looks like NASDAQ's almost unched again. And so that's about right. So iPod Touch, I hope you took your victory lap because we are right back to all-time highs. And so let's see. Joel James says, thank you, man. I appreciate you so much. Rancher, appreciate you too, my friend. Arrow back in the house, muddying up my YouTube chat. So Adam Armfield, hey, Jim. Ilya mentioned that now is a good time to put debit spreads because of low volatility. How would I go about choosing duration and strike price? I'm eyeing GameStop's 1.5 IVR for a call. So GameStop, man, I told y'all we wouldn't talk about the stock anymore. And here it is, GameStop. Wow, look at that, $22. I mean, I am flabbergasted that they're still in business. There is no way. Roaring Kitties and Ryan Cohen's and whatever. It's like, yeah, it's got to be. I mean, if Pinterest is going down tonight, GameStop's got to be very, very close behind. But GameStop down 20 cents. Okay, so I didn't hear what Ilya said. So Ilya, I mean, based on low volatility, we'd be looking to buy put debit spreads, which that doesn't mean right debit spreads. Did you say right debit spreads? Yeah, so right put debit spreads. Okay. So usually when you use the verb right in the options world, that means sell. So selling a put debit spread is obviously a contradiction. So I'm assuming that Ilya meant, to buy put debit spreads, because that's what we would be looking to do with volatility, on the lower end right now. And so for us here, yeah, I mean, GameStop has earnings on September 9th. If I was gonna do something in GameStop and I wanted to do it with a long put spread because implied volatility is low, this is what I would do. I would go to September 5th with 29 days to go. So you're kind of avoiding the earnings that's coming up. And I would just do an at the money vertical spread just to take a directional shot in the stock. And if you want to buy a put spread, then you're bearish. If you want to buy a call spread, then you're bullish. And so that's how you would look at that situation. That's how we typically handle debit spreads. And that's, kind of the same modus operandi that I would maintain myself. And so with GameStop at 22, you could buy a 23 and sell a 22. You could do that for 60 cents, which is pretty, that's pretty cheap, obviously. I don't know what account you might be working with there, Adam. And so if you've got a fairly small account, like 10 grand or less, this could be a nice trade to just take a little shot. The problem is you don't really have a lot of economic significance. And so 23, 22, now that I think about it, this probably doesn't make a lot of sense. I just kind of gravitated to it because it was essentially one strike on both sides of where the stock is. But then I was quickly met with the fact that we are dealing with a very low price stock here that is on the brink of insolvency. And so maybe we widen it out a little bit and maybe you do like a 23 and a half, 21 and a half. That's way better. Man, that's like a breath of fresh air. Yeah, don't do that garbage I had up on the screen a second ago. So hopefully you didn't already do that. You should be doing the opposite anyway. But wait, this was your idea. So no, you should probably still do this. But instead of doing a 23, 22 for 60 cents, that doesn't make a lot of sense. The 23 and a half, 21 and a half is 95 cents. Now it's risk $1 to make $1, right? Usually when we're buying, debit spreads, we're choosing the at the money strikes. Now, could you get a little creative and could you be a bit more directional? Or at least not really a bit more directional, but could you be a little bit more skewed in favor of, profit potential relative to what you risk? You could. Right. So instead of doing a 23 and a half, 21 and a half, you could do a 23, 21, right? To where now you're only paying 90 cents for it. So my return potential just jumped up a little bit. But in exchange for that, your probability took a little bit of a hit. So you have to decide. This is your call 100%. Like, what do you want to do? Do you want to have essentially a 50-50 shot? Or are you okay with the probabilities maybe drifting a bit lower in exchange for a little bit more profit potential? It's your call, 100% your call. I don't personally have a big issue with, trying to, finagle the risk return metrics of a given trade by going slightly out of the money to help things look a little bit more favorable when it comes to what you're risking relative to what you could potentially make. I don't have a problem with that. The thing I don't want to do, and I would not want to necessarily see you do, is kind of shift into where now I'm buying like out of the money spreads. So I'm buying buying a 22, selling a 20. Right. And I'm doing this for 50 cents. So it looks really good. Like I risk 50 cents to make $1.50. Like, I've got a 3x multiplier there, but you can see the probability is really starting to, it's actually higher than I thought it would be, 39%. And so, but still, it's like, man, I like to be kind of around that 50-50 mark, 45 to 55, let's say. And so that's where I typically like to live. And so I would encourage you to, just at least gently consider something similar. And so let's see, Robert's in the house. He was talking about Cat the other day. I guess he didn't put on that trade. No, we did a vertical spread. We didn't do the butterfly and caterpillar. We did the vertical spread. And I think we made a couple of bucks on that one. And then Brian says, that's why I'm asking Dr. J why he keeps doing them. Is it for entertainment for us to light stacks of cash on fire? Well, I mean, again, it's for you guys to make money by doing the opposite. It's for you guys to make money by fading all of my directional plays. So however I might choose to do them, right? Don't let that dissuade you. Don't let that distract you from the mission, the goal, which is fade Dr. J. It's very simple. It's very simple. Whether it's a vertical spread, whether it's a butterfly, whether it's even like a short put, whatever, short call, whatever. If it's directional, you need to be on the other side of that trade if you're serious about making money. And so let's see. Sergio says Harold Coleman came in from the Coleman settings. That's right. I think when we clicked on him, it probably it probably texted him. He may get like an automatic text or some kind of notification, kind of like how you get like, notifications on your phone. Like you get a notification from like Instagram or you get a notification from like, whatever, Yahoo Finance, whatever. Right. I think Errol also gets a notification, like when his Errol Coleman settings are used by someone other than himself, like I think he gets notified on his phone. And so he probably got buzzed and he's like, well, let me go see, kind of where that's being used. And so yeah, that's awesome having Errol on the stream today though. Yeah, I mean, him and Gus are on at 4:30 Central, so there you go. 100%. You guys don't want to miss that. Errol and Gus together. I mean, that's the dream team, man. That is the 100% dream team. So like if you've been wondering, like, man, like I've been with Tasty for a while, like it's amazing, like I love it, like whatever. I wonder what Tasty is going to look like in 2045. Like what is Tasty going to look like in 2045? Like, is Dr. Jim still going to be there? Like, nah, man, I'll be gone pretty much any day now. But Gus and Errol, those are your guys. There's your 2045 crew. There's your From Theory to Practices. There's your From Theory to Expectable Butterflies. Like, those are your guys. That's the future of the network right there. There's your 2045 hosting lineup. And so, Rancher, it's for the thrill of it all. It's for the love of the game, man, for all of my Kevin Costner fans. Yeah, entertainment and some education along the way. Sounds right. That's right. It's supposed to be edutainment. That's actually what, and Brian says I'm entertained. Well, I'm glad to hear that, man. I really am. Honestly, when Tom hired me, he's like, hey, it's edutainment. That's what I want out of you. And I said, I'll try my best. I said, let's go. Like, I think I can do it. Like, let's go, whatever. And so that's what it is. It's supposed to be a mix. And so I'm glad that you are getting a little bit of something from it. And so let's see, Sergio, enjoy your show with the doc. Well, he's not really on air with me. And so like when I'm on with Errol on Wednesdays, like he's the star of the show. Like I'm just the eye candy, man. I'm just the sultry voice. Like Errol's the brain power behind that whole program. And so don't let anyone fool you that I'm just there. I'm just there for the clicks, And so Emmett Morrison says, I put on an Expecting Move Butterfly and Palantir that pretty much pinned my short strikes. There you go. When they work well. That's correct. That's correct. And I mean, you guys can even see, I don't think I've ever done this before. We're going to take a victory lap on something we've already taken a victory lap on. So if I go to SPX, so this is like a retroactive victory lap, right? And we've already milked this guy before. You thought it was done, but we just found a few extra drops of juice. So on 729, right, we did a butterfly. That must have been on the Fed day or something. I think it was on FOMC. But we paid $6 for this butterfly, right? And you can see over here that it was $35 wide. So a pretty wide butterfly. And that's another tip for your butterflies. Make sure they're wide. Pay up to make them wide. If you do $5 wide butterflies and, $8 wide butterflies, you're just throwing your money out the window. Like those are going to be so hard to make money on. It's not worth it. I promise you. I can assure you. But you can see right here, like this was a really, really, really nice trade. Probably one of the best ones I've had all year. And so, I mean, this is essentially your best case scenario. Now I understand that there was still another, $9.50 left in that butterfly. But that would require pinning the strike like Emmett was able to do, and like we actually did on this trade, but then also holding it to the very end. So this is actually a really, really good teachable moment that I don't even know if I brought this up when we went over this on July 30th. So on July 30th, we 100% went over this. Wait, hold on a second. No, it must have been on July 31st. Because July 30th was, I think, a Wednesday, so we had today's assignment. And so then on July 31st, so the day after, I know I went over this trade for no less than 18 minutes. So if you go back and watch the July 31st show and you're brand new to this show today, you'll get to see me talk through, all the things that, went right and went wrong and whatever with this trade, just my full analysis. But the thing that's important here, so notice how if you look at the width of the spread, right? The width of the spread is $35, right? I was 21 minutes away from close. Look, you can't really get that much closer to the end of the day. You can't. And I mean, this butterfly was set to expire, it was set to expire July 30th, right? So it was set to expire that day. It was set to expire in 21 minutes. And look, and when I took this off, the SPX was at 63.40. Not to the nose, maybe, 70 or 80 cents either way, but it was right on the short strike. And look at how much I still had to leave on the table. Now, it was a great trade. Don't get me wrong. Like, I'm happy it happened. Like, I'm not lamenting the situation at all, but this is to illustrate just how difficult it is to get maximum profit or really anywhere near maximum profit on an Expecting Move butterfly or any butterfly for that matter. And so this is why, you need to be wide to give yourself chances to win. You need to understand what you're signing up for. And this was right at expiration. It could not have been closer. There were no crystals left in the hourglass. Like this was it. And I still had to leave $9 on the table. And so that's just understand what you're doing, understand what you're signing up for. I think it can be really really helpful. And so let's see. Brian says Apple is up big. Is Apple up big today? Let me take a look at this. Yeah, my mouse is really kind of not doing. It's really hurt. Oh, it is up big, up $6 today. All right, that's some good stuff. Whoa, hold on a second. Wait a minute. Wow, thank you, there, Brian. Wow, look at our put. Oh, we can take this off now. We don't need to keep this on. I mean, we sold this put for $2.89. We can buy it back for $1.33, and that's more than 50% of max profit. Yeah, so let's do that really quick before it gets away from me. Man, that's good stuff. I'm glad I saw that comment because I mean, we don't really want much more out of that trade. That's pretty much the maximum. Excuse me, that we'd be going for. Let's see. Sunflowers in the house. Mark's in the house. First healthy meal: bison burgers and veggies. I might go into cardiac arrest from a bison burger. I mean, bison. I don't think I've ever had bison. My guy though, which I am actually going to go Thursdays are daddy's chicken day. So when the market closes today, I will head down to my guy that's in downtown St. Pete, where I load up on all my daddy's chicken, and then I make daddy's chicken on Thursday night, and then that's essentially what we eat for the week. And so he's got bison down there, though. I'll have to maybe give that a look at some point. But I don't know why that would send you into cardiac arrest. Now, if you were like, I'm doing some bison burgers and some bacon, right, and some jerky, if you were like one of those guys, then yeah, that would be a cardiac arrest for sure. But let's see. Jeremy Wallace in the house. Appreciate you, Jeremy, saying he needs some details about what happened. I'm not sure what you're referring to. Wish I could remember. But I did swap out my blueberries for strawberries today. And so the memory is not firing on all cylinders. Daniel Perkins in the house. I'm late. Surprising to delight me by joining our Discord. Man, I mean, I'm happy to pop in. I've never done a Discord before. But if you guys hit me up on Twitter or whatever, send me a link and you guys want me to come and talk to your Discord peeps, like, let's make it happen. 100%. I've never done it, so you got to walk through it. You got to walk me through it like I'm your grandfather, like you're trying to show them how the internet works, like it's one of those type of deals. But I'd be happy to do it. Be happy to join the Discord for, a 20, 30-minute discussion. It wouldn't be something I would keep up with regularly. I can already tell you I won't be able to do that. But if you guys ever want me to pop in, just let me know. I'm very happy to do it. Let's see. Michael says Taco appears to be creating positive skew in the key chips. Man, I'm ready for a little Taco Thursday. I think we can do it. I think it's allowed. And so that's good stuff there, Michael. Appreciate you. Chris says Spoos can't catch a bid today. Yeah, apparently not. It's still down 23. And so it's been NASDAQ is now hovering around unts, though. It's going to be so funny when they finish them up like 100 or something crazy. Let's see. Brian, I'm thinking about this for consistency. It seems like it's not the best way to go. Maybe I'm wrong. It's just from my observations this past 8 months, I've been watching Dr. J. You're still talking about the butterflies. Give it a shot, man. Again, it's not intended to be the tried and true foundation, but it can be a little something around the edges. Let's see. Sergio's in the house. Sam L says new study suggests energy drinks may stunt muscle repair. That's absolutely fake news. That is 100% wrong. Like bro science assures you that energy drinks are only going to make you bigger, stronger, faster, and better. And so I'm gonna discard that information very quickly. And so let's see. Emmett Morrison, quitting popsicles cold turkey isn't recommended by 9 out of 10 cardiologists. That's funny. Mark likes it. Emmett, let's see. Mark, I need you to step in and stop the spoos from going down a lot. We'll go with that to keep it family friendly here on the show. And so, they apparently have stopped going down, so that's good. Let's see. Oh, Sunflower says, Dr. Jim, I unlocked the next level Okay, in the analysis, if you click call or put, you get all the option prices for the strikes for about 10 days. I'm wondering how I can use this data. Yeah, I knew that you could do that. I don't know. Let's see. Yeah, that's really crazy. If I go to no, I don't want to do that. Yeah, I think you're talking about just this is the actual price of the call. I think it is, right? Hold on. Let me go back to this. So if I go to if I right click on this 195 put in Apple and I go to view the option in a chart, I mean that kind of gives me, well, this is only a weekly. Let's do a 1-day chart. Let's go back, like you said you get 10 days, right? So 2 weeks worth. Yeah. Do you get more than 2 weeks maybe? Yeah. I mean, it gives you, it shows you the option. Can I get like 3 months? Wow, look at that. Yeah, I mean, I don't know how far back you can go, but that's pretty nice. Well, I mean, obviously, it's gonna be. Well, I don't know. You go back 6 months. Yeah, I don't know because it's going to be tricky because it's like some options, like options really distant in the future, like they don't really have a lot of activity. And so I'm not really sure how we can use this data either. It's really interesting though, like very interesting. I'm sure we're going to find a lot of cool uses for it here in the near future, but yeah, I don't know either, but man, that's just the developers just coming up with cool things for us to, kind of find a use for later on. And so, but thank you, Sunflower, for bringing that to my attention. Let's see. Mark Samuel. So I guess slamming a ghost post leg day wasn't anabolic science after all. Well, you don't want to. You're not slamming it post leg day. Like that's the mistake. Like it's obviously these are pre-workouts, not post-workouts, right? Now, if you're doing the ghost pre and post, if it's like, man, this is gonna be like, we're gonna do this on both sides of the equation. Now that would be a power move, obviously. But let's see. Daniel Perkins, I had the AMD butterfly, closed it for 75 cents today. Better than zero. Yeah, I don't blame you. I really don't blame you at all. Again, I'm gonna sit tight because let's see if something crazy can happen. Let's see if we can't get a little something, for tomorrow. And so yeah, but let's see. Can I get to one more really quick? Trump tweeted it. Trump just tweeted it's a good day to buy. Well, that's obviously, the best buy signal you could possibly have if history is any guide and any indication. Let's see. AMD was several very slight misses. Oh, was it really? Okay. I didn't know that. And then let's see. Who else is, I see Grumpy Mike in the house. Says Dr. Jim until 2:15 today. Another 3 hours, man. I don't know what time zone you're in, like Hawaii or whatever. But no, man, like we have actually, believe it or not, we have reached the end of the road. Like Boyz II Men tried to warn us 37 years ago, and here it is. We've actually reached the end of the road for today's show. I can't believe it. And so, guys, I appreciate you guys. I appreciate you guys so much. Come back tomorrow because we have an extra long show tomorrow as well. We'll go all the way to 2:15 Central or 3:15 Eastern. But if I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultz_F3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, train them heavy, and stay generous. We'll see you guys tomorrow.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Don't screw up. You're the weakest link here.
You guys introduce yourselves.
I'm Tony Batista.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto. We got it. We get it.
Hey everybody, Tim Knight here. It's time to look at charts together. We've got a deliciously red day on our hands, and it certainly did not begin that way. We began the day utterly in the green, which was odd because, jumping back to when you and I last met, the market closed on Wednesday, and almost immediately thereafter, sometime thereafter, word got out that there's going to be 100% tariff on semiconductors. And that's pretty interesting news to a bear. And I glanced over and like the cubes were falling quickly. NVIDIA was falling quickly, SMH. It all lasted for about a minute. And then this big asterisk came out that said, except if you're like building a factory in the United States. And then it completely reversed. I can only suppose there was a notion that some such order was going to come out. And so when it came out such that it was really easy to get out of, there was a big celebration and everything went blasting higher. The only thing that did just the opposite was Intel. Because I guess at first the perception was, well, Intel's already domestic, so they are in a sweet position. So they rallied after this 100% news. And then when it came out that, oh, it doesn't really mean anything, then they fell hard. And they fell even harder when Trump zoomed in on their new CEO, saying, you got to get rid of this guy. Something about a Chinese connection or something. So, all that was going on. For whatever reason, we did start selling off to some degree. I've got 30 different short positions. That's about as high as it goes because I'm out of screens. I'm like, if you saw my room, I'm surrounded by screens here. I can't fit any more in, so I'm going to cut it off at 30. And almost 30 for 30, they just went like, and they all sort of like softened up together. So it's a pretty good day. Nothing calamitous. I mean, like the NQ, it was up hundreds of points. Now it's down a little bit. I will happily take that. As long as it's red, that's fine. So I've got some charts loaded for you as we approach the end of the week and definitely get way out of the interesting part of the earnings season. So let's jump in and catch up with what's what. We begin with the spider, and you'll see this very consistently. We started off strong. We're currently weak. We pushed higher, not to lifetime highs. Haven't had to deal with that this week, mercifully. But we have been selling off on the spider like so without achieving another high. Here's the diamonds, also red. Got a nice bearish engulfing pattern on this one. Its own lifetime high was established just like most everything else last week, I guess it was. And the IWM, which is of special import to me because I've got such a big short position, that is red, bearish engulfing pattern on this one. Off about 0.7%. So yeah, generally speaking, a quite good day. I will say amongst these 30 shorts, I've kind of stopped the options thing myself. It's almost just purely equities, usually with one notable exception. 29 of those are just plain old simple short sales. One of them is a very aggressive options position on the cubes. Their October expiration, I like lots of time. It's like 72 days left. And so that's my crazy trade. In case anything actually goes down hard, that'll be the big winner or the big loser. We'll see. But it's a pretty asymmetric bet, so we'll see how that goes. One sector which used to be just incredibly powerful and profitable has turned very cold quickly, which is anything to do with Ozempic type drugs. You know, injections that kill a person's appetite and let them lose weight. And I guess a year or so ago, I don't know when this was really, really big news, but it was seen that this drug is going to change the world. Americans are going to get thin. Snack makers, junk food makers are going to suffer because they don't need any more ho-hos and ding-dongs and, you know, Dolly Madison cakes or whatever else they sell. And even airlines were saying, we are going to save on fuel costs because we don't have as many of these tubbies to tote around. So it wasn't just some obscure thing. Any industry touched by this talked about it. You know, selling fewer snacks, buying less fuel because the plane's not so burdened by bloat. And of course, the drug makers doing fantastically well. That's really turned fast. I'm not sure exactly why. Maybe the users of this quit or something like that. But across the board, it's been pretty weak. And good heavens, I got ahead of myself. Remember everything I just said. Let's talk about semiconductors for a sec. I do want to talk about Ozempic, but let's just touch on semiconductors because that was the big deal last night. Hold that thought. Here's SMH. We're up on this one a little, but it's a little red for the day too. So again, weeks and weeks of just grinding away. Intel, as I said, doing what it does best, which is fall. It's down 3.25%. Its glory days ended a quarter century ago, so that's doing poorly. So that's bleeding into the cubes, which were strong, but are off a little bit right now. As you can see, even at today's peak, did not match the lifetime high last week, and we've just been selling off like so. And that's where my big long put position is. Now, back to fatties. Here is Eli Lilly, and they came out with earnings this morning, which I guess were quite soft, and it's taken a hard tumble. You can see the distribution top here spanning like 18 months. This hit its lifetime high of almost $1,000 just a year ago. And we've lost over a third of that market cap. This is not some pipsqueak little company. This is Eli Lilly. This is a gigantic, really old international firm, which has been around for many, many, many decades as a financial instrument. So blasting a third of the value off that, kind of a big deal. And today alone, off over 13%. I had no position in it, and I don't blame myself because it's a very sloppy chart, but congratulations to anybody who was bearish on this thing. Novo Nordisk is a little green today, but not because it's doing well in general. You can see here, they've already kind of had their flogging. They went down from around 150 down to, they've lost 2/3 of their value, actually more like 70%. But you can see even from this great distance, what a shellacking they've received. This chart goes back to the Pleistocene. This is like Reagan's first administration. So big drop on NVO, which longer time viewers may recall this fantastic head and shoulders pattern I pointed out back then, which to this day continues to be a very powerful force in this drop. And the other one, much younger, but also part of their business on Ozempic-like medicine is Hims and Hers Health, HIMS, which had its lifetime high just last week and has descended from 70 to 50 approximately. So pretty big deal on that one as well. Over in precious metals land, XAU, this has exceeded this wedge. In my opinion, it does not negate the value of that wedge. It's gone super expensive at this point, and I hadn't actually tried to do anything with this until today. I've gone ahead and taken on a short position in GDXJ, the juniors. GDX itself, which is the big one, it has had a terrific week. Monday, Tuesday, Wednesday, Thursday, another gain today, but looking a little tired. Got that little doji pattern going on there. At a minimum, I would easily see this easing back to this breakout level. The short I've got on that is not intended to be a long-term one. Going back to that support area would be fine. I also got out of palladium, as I mentioned, because it was getting super lofty here. We had kind of this vicinity. It got higher than ever here, but it's really sunk down. And I think it'd get a lot more interesting if it can seal up that gap right along that zone. Trump also, I guess, signed an executive order to get much more liberal rules around what 401ks can go into. It used to be very conservative, but now it's anything goes. Bitcoin, Ethereum, private equity, baseball cards, God knows. So it's been a big boon again for crypto. Not a lifetime high on this. It's still below the broken trend line, but this is the latest political red meat thrown out for the crypto crowd, and it's celebrating with a pop on BTC. As I said, I've got a whole bunch of short positions. I want to touch on a few. Big winner today is Elf Beauty, ELF, which took a hard fall. I've actually gone ahead and taken profits on this, but this was a nice fall. I took profits earlier today because it's a very sloppy chart, but it did a nice job almost perfectly sealing this gap. So again, the gaps work in both directions. So the price gap was way down here, just about tagged it. And so it's rallying. So in this instance, it's completely plausible that it would rally back to this gap, which is a new gap today. So ELF worked out very, very nicely. Caterpillar down double digits. Nice reversal there. So I probably want to tighten up this stop as well. I haven't done so yet, but probably belongs. This is what you want to see as it kind of moves in your direction, kind of follow along with it, try to lock in some profits, reduce risk. CrowdStrike, very nice. We've talked about this several days in a row, down about $25. Beautiful. Absolutely terrific. Rigetti competing RGTI. I made mention that I was tiptoeing into a very dangerous space for bears, which is quantum. This is going all right. We're down over 3% on this one. And there's other items. As I said, I'm kind of out of screen space. I'm as tempting as like QBTS or QUBT is. I have my irrational limit on that, which is screen space. So I'm just sticking with RGTI. So that's going pretty good. ConocoPhillips. This is up a little, but energy stocks are looking quite nice on the bearish side still. XLE's looking good. XOP's looking good. I've got HAL still, things like that. A little bit of a bounce today, but I still like this medium term on the short side. There's a JB Hunt, JBHT. Beautiful top on this one. We're down almost 3% on this, so this is moving the right direction. And one last one, kind of Ozempic related, I suppose. Royal Caribbean RCL, and this one I've tightened up the stop like so. And it's still way up there. I think we've got plenty of downside potential on this. And the bulls are fighting back. I mean, I watched the wiggly jiggly charts here, and you can see that with every little sell-off, there's like, no, and they try to bid it back up, and then it sort of succumbs little by little. It's not a very exciting day, but it has been a multi-100-point reversal on the NQ, so that's pretty righteous. I mentioned in passing my reluctance to go too zany with the quantum, but yeah, just FYI, those charts look like this. Here's Qubit's D-Wave Quantum is the company name, and we hit our lifetime peak recently, but we've been sort of like easing back into the confines of that range. And then there's Quantum Computing Inc., QUBT, which had its own lifetime high a while ago, last year, and since then has been sort of easing down into a series of lower lows and lower highs like so. But just to wrap things up, it's a little encouraging that a very powerful, very protected sector, banking, is actually feeling some heat. Here we have XLF, bearish engulfing pattern on this. Gap closed beautifully. And what we want to see next would be a failure of this gap like so. It currently represents support, but if we snap it, that'll be an important failure. And as I said a number of times, fear has left the building. VIX is way down. Puts, in my estimation, are quite cheap, which is why I've been gobbling up those cube puts like someone who doesn't take Ozempic. So that's my big crazy position there. All right, nailed it. Bottom of the hour. I shall bid you farewell and see you tomorrow. And we'll wrap this up. Good night.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
What did you get up to last night?
I had a rough night. I was doing webinars till 7 o'clock.
Oh, no.
Yeah.
It's hard being a cam girl.
It is.
You had breakfast for dinner?
Breakfast for lunch, breakfast for dinner.
Oh, no.
Yeah.
Was it even good cereal?
No.
Well, yeah, I was like, what kind of cereal do you eat?
I had some...
You're like a Mueslix guy.
No, I like Raisin Bran.
Okay.
Special K and granola. I like oatmeal too.
Okay, congratulations.
We weren't talking to you. I like cream of wheat.
to me.
I like cream of wheat.
I was literally talking And he's just like, I like oatmeal. It's like, okay.
I'm gonna tell you right now, St. Bart's.
Yeah, here we go. See, I knew I'd get Tom going. I have to
only
just talk
been
about
there.
St. Bart's.
I've been there a couple times. I love St. Bart's.
Couple of times?
Couple times.
Are you sure it's not going to get you in trouble? would you like me to get that cut out, or would you like to keep that in there?
Keep that in there.
Okay.
What's the other?
Tough
What's
guy.
the other?
Wait till I tell about St. Bart's a couple of times. Wait, I could be wrong, but wait, I have it here on film.
Wait a minute. Hold on. I've only been there once. What do you mean?
I already texted how many times you've been to St. Bart. Once. I go, ooh, do I have news for you?
I'm getting tickets. You're coming with.
I'm not.
Yeah, you will. I'm buying good seats, and you're gonna
I'm
come
not sitting
with.
through it.
You're gonna tell me Elton John's no good?
Radio was
one of the worst concerts I've ever seen in my life.
In the day, you're gonna tell me Elton John's no.
In the day, what? I didn't see him 40 years ago. I'd rather see Lady Gaga.
So
you're a freaking poser.
So then I said, hey,
what? Give me one name of one Lady Gaga song.
I don't know the names. I just like before we get all excited here and start, and start using those little what do you call those things that you blow out on New Year's Eve?
My what do you mean? What?
Get the full scoop by checking out the archives at tastylive.com.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. Well, with the last call, Sadnov, we might be able to say it today. Even the S&Ps are presently down 21. NASDAQ might be red on the day, Sadnov. It's red by 10 handles. Russell down 12 and the Dow down 307. Volatility off of its highs of 1820 to 1795, up 27 cents. Bonds down 1 or 2 ticks to 115.17, kind of no man's land. Bitcoin hanging out over 117, actually caught a little bit of a bid for most of the day. Oil down 61 cents, trading near the lows of the day after trading up to 65. It's under 64 to 63.74, just about 2 pennies off its lows. Gold is doing the opposite, up $30 just off of its highs. Had a nice rally last week or so. Silver up 47.5 cents. It too has had an even better rally today and over the last couple of days in silver. Net gas basically unchanged. It looks anemic. Sadnov, some of the stocks that were the big movers today on the downside. I know you know about Lilly because you had a position in there. Down $103. It was actually about $10 lower than that intraday today so far. This FIG, which is untradeable, I told people today to forget about this stock, but it is down at $11. Airbnb down $11. CRCL down $9. CRM down $8. Popular name Meta down $8 and change. Microsoft down $5 and change. Roblox for the first time in history, Sosnoff, down $4.50 some odd cents. To the upside, well, you got this app loving, son. I've never seen this on about a 12% move here, up $47. It was actually up $15 higher than that earlier today. MSTR up $17 with Bitcoin higher. I see the correlation there. TSM up $10. That's a big 4% move there. Dash for earnings up $10. AMD up $8 and change. VST for earnings. And Apple with another good day up $6. And Costco up another $6 after a big move yesterday. Sadnov, that's all I have today. We've got Expedia, Win, TTD, TTWO, and Akamai.
And Rocket Labs, I believe.
And Rocket Labs is.
You can check on that. Somebody told me Rocket
Labs.
Labs.
Going to right now. Yeah. I don't mind the help. I don't mind the help. Rocket. Do you remember the symbol? RKLB.
LB. Yeah.
There we go. That would be on the 7th after the close. Today happens to be the 7th, and we almost are at after the close. Sadnov, you are 100% correct. RKLB. Let's take a look at the August markets here.
Okay.
Not bad. 30 IV rank. Okay, not bad. I'll put it down.
Okay. More importantly, let's talk big stories of the day. As foretold, sell-off of almost, I would say, 70 handles today, right?
Yeah, almost 90 top to bottom, but
yeah, top to bottom, almost 90. But like legit middle of the day, up 40 this morning, and then next thing you know, they were up, obviously more than that, but then down 35, 75 handles. But for most of the day, up 20 to down 20-ish. They're down 15 right now. Nasdaq's up 18. I think I'm going to count this as a down day.
You can count it as a down day. The Nasdaq just turned green. You can count it as a down day. I count it as a down day. And more importantly, your first day, which we both agreed that the highs were in last night, that they would not make the new highs. We both agreed, Sadler, you finally got on my bandwagon and you got the day's directional move correct. Good job out of you, my friend. Good job out of you.
From early this morning, I said today's a down day. They're going to turn around. I called it turnaround Thursday. Yeah, I think it was maybe I'm. You know what? I've been doing this for so long. I don't want to overthink this, and I don't want to say, oh my God, there's something. I felt early today that because Apple was up so much, which it still hasn't moved all day.
It hasn't. I mean, it's $1 off its highs, up $6.
No. Yeah. It hasn't moved all day. But I felt like today is the day when the rest of the market, kind of blew its brains out.
Yeah. I mean,
do you notice a trend here? I mean, there hasn't, other than AppLovin, which I don't really care about, every single earnings trade has been like has been an implosion.
Yeah, it hasn't been good. It hasn't been good for stocks.
Hasn't been good.
Yeah.
And they haven't come back for a lot of these stocks. Not really. I'm kind of thinking about today as pretty decent down day. I don't know why. Only because we're up so much. So I'm taking it as a win. I don't care what you say.
I don't think I've ever heard a veteran trader like yourself say a 7-handle move in the Nasdaq is a significant down move, and a 20-handle move in the E-mini S&Ps is significant. And Sadnov, we haven't moved anywhere all week long. I mean, the expected move over the last 4 days. Let's see, what we opened here at 62.50. 62.57 is where we opened on Monday. We're 63. I'm sorry, 60. We opened, 62.57. We're 63.52, but we closed the previous day right here, Sadnov, 4 handles higher than where we are.
You got it.
I mean, we haven't done anything. We haven't gone anywhere. The only thing that's happened is volatility's contracted, which is good.
Volatility has contracted.
Not today, it's up 25 cents. I'm saying for the week.
Yeah, I know. But in general, across the board, it has. As far as some of the underlying, I mean, I kind of feel like we're just playing little, it's kind of, we're playing musical chairs right now. And just, one day they pull the chair out and the next day it's a different chair that they're just pulling out. I don't think there's anything, I don't think anybody can, there's no trend here. There's no nothing. It's just, hey, you know what? Trade them up.
You know what? My peeps are already writing in, Sosnoff. They're saying negative 20 is a firm down day after 500 up days. This is a pretty decent down day. Defend yourself.
I'm going to defend myself. And the S&Ps were up, 40, 45 handles this morning, and they're at one point they were up 50, and now they're down 20. That's a pretty decent down day. NASDAQ. Let's put NASDAQ in perspective. This morning we were selling it. My high sale in NASDAQ was 20. I'll tell you. I don't know. I can't tell you offhand. I'll tell you in 1 second, because I think I'm going to give you a number here, Bat, that I actually traded it at, not a number that you just make it up. 20. Let's see, NASDAQ.
Let's see here. You're unbelievable.
My high sale, 23,647. 23,647. 200 points higher.
Yes, you are correct. You are correct.
Yeah,
I can validate that.
23,647. I'm not just talking about trading at the high side. I'm telling you where we actually traded it. I shorted NASDAQ futures at 26. That's 200 points higher.
And so you made 8 handles.
Whatever. I made 20. I made 20. But the point is,
whatever. 8, 20, same difference.
The point is that they traded there. So 200 points sell off is something. Nothing, 210, 220 points is something. It's a 1%er.
Okay. All right. NVIDIA has about double the normal of option trading today. NVIDIA really haven't talked too much about.
Why is that?
I don't know. Only up 50 cents or so. NVIDIA had a range today of about $5-ish from down to 178 and change up to about 183 in change.
I know, but why do you think they had double the volume today? I can tell you, I have a couple of theories on this.
Okay, go ahead. Shoot, I don't have any.
Okay. First of all, I think that there was extremely heavy volume all over today. I think that, and it's not represented by my trading, but I think there was extremely heavy volume today. I thought the S&Ps were active. I thought the markets were tight all across the board. I thought there was a lot of activity from all over. I'm going to continue to use my argument that until football season starts and until the kids go back to school, there is going to be a lot of action. It's funny. Vanetta said something yesterday, which I thought was really interesting. She said the amount of searches on the various AI platforms, like ChatGPT and other things, was down significantly because none of the kids were away at school. And that makes total sense to me for some ridiculous reason. I would expect that part of the reason there's so much volume is because a lot of kids are still home, and part of the reason is because there's no sports to bet on. And also what you saw today was kind of a big reversal in a lot of the so-called, not really meme stocks, but the IPO stocks, like Fig and Circle and the list goes on. But a lot of those stocks took a little bit of a hit today, didn't they?
Yes. Yeah. They most certainly did. Yep.
Yeah. So there was a little bit of, a little bit of that. So I think it was a lot of, and maybe there was a little sector rotation. I don't really know. But it felt to me like a little toppy today. That's all.
It did feel a little toppy today. I got the emails from people saying, like, what is Tom thinking about here? Like, why is he saying, 80 handles down, close all watertight doors, that kind of thing. I'm
kidding when I say I
know, and that's what I told him. But I think
I'm not kidding. I don't say something I don't believe. But it's just.
We wanted to sell rallies, is what you wanted to see. You felt a little bit more confident in selling rallies. You didn't think the market was going to crash today or even go down 80 handles, but you thought you could confidently sell rallies, and I think that was the tone for the day. I mean, they're catching a little bit of a bid here, but I think that was the tone for the day.
I completely agree with you. Yeah, I mean, they just caught a nice bid. They just rallied 20 handles from 32 to down 12, and the NASDAQ was down 30, and now it's up 27. I mean, this is, if they close them here, it's a complete non-event.
Yes, agreed. I don't think you can take anything.
Well, we've got 1 week to expiration. It has traditionally been a little bit of a heavy. If you want to talk, I'm not a seasonality person, but August expirations have never been kind of this explosive upside. So we'll see what happens. In the course of the next week. I would expect more of the same choppiness. But we
got expiration next week, just in time for our show, Sosnoff.
I know, but don't you feel like a lot of this rally in this market has been very narrow?
Yeah, I don't think anybody would argue that for sure.
Right. I feel like it's been really narrow. I feel like it's been a handful of stocks. And I don't know. I always feel like that's when markets are most vulnerable, but who knows?
Yeah, I mean, it was a big reversal day. I mean, it's not really a down day. I mean, unless you're looking at maybe the Dow and the Russell, which have been weak all day long. But hey, before I do that, Expedia, Win, TTD, TTWO, AKAM, anything interested there?
There's a few of them. So for starters, we had a small position on existing in TTD. It's called the Trade Desk. Now, let me tell you something about this. Yeah, let me say something about this. I don't know what the Trade Desk does, but this is a horrible stock to trade. I'm strongly recommending, unless last time they missed and the gap opened down. You see that giant gap in that chart?
Yeah, right here.
That was their last earnings, and they got annihilated. But this is a stock that even on a good day when there's heavy volume, it's really hard to get good fills. It's a crappy stock to trade. We have an existing position in there. We have this, which I'm just gonna keep on. We have the 67.5 115 strangle in September, but we did not add a new position for earnings. And it's I'm gonna just reiterate, it's a crappy stock to trade.
Expected move $11 going into tomorrow.
If
they're
I remember
technology
correctly,
company,
Tony,
nothing to do with a trade desk. They're a technology company.
But if I remember correctly, it was almost like a $20-something move last time on earnings when it got annihilated. Also, I did trade a little bit of Rocket Labs, RKLB. It's another one of these meme-ish type stocks, I guess. I'm not sure how you would describe it. It's a Rocket Labs is, let's just see for a second. It is a $44 stock right now. It traded 16 million shares, which is not that much on a $44 million stock, but it's got tighter markets that trade in between bid and ask. So you can get filled on the August options, like a penny off mid price. That's what I like about it.
Yeah, you got half dollar wide strikes too. So there's
also a cheap stock.
A lot to do.
Yeah, it's a cheap stock with an expected move of about $5.
It's a space stock, so I don't know if you know this. Come on, it's all about.
I'm a space guy. I'm a rocket guy. Rocket man.
You're a space cowboy.
Yeah. Anyway, it's a stock that has a $5 expected move. It's got decent volatility, in the front month, almost 150% or something. I would disregard the 200% in the one day. That doesn't mean anything. And you can get filled
1 day options you're talking about, right?
And you can get filled a penny off. You can get filled a penny off mid price. I sold 2 calls and 1 put with 1 day to go.
Okay, very good.
I collected
XYZ, your favorite stock in the world, I am told, has earnings too, and they are correct. Almost $77 stock, IV rank of 39. August options are good, 10 cents wide, some volume there. September options are good also. So XYZ, Sadnov.
Not a stock that we trade a lot of. About a $7 expected move, you said?
Yeah, $7 expected move. I got to thank
Stock's
my
trading
friend
for
Joseph for bringing
76.
this to my attention.
Stock's trading about 76. Yeah, you can get some premium if you go out and, you want to take a 1 day shot, Mr. Batista, sell the 65 puts and buy yourself a little, buy yourself a.
Go ahead, put your foot in your mouth. Say something stupid. Go ahead, say it. Go ahead, I dare you. Go ahead, say it. Say something silly. Go ahead. 65 puts are trading around 53 cents on them. You're going your 2 times expected move to the downside. Almost 2 times expected move.
Yeah. Yeah. Last time I did this in DraftKings yesterday, it worked for a few pennies.
And you got filled at 53 cents. Look at that.
Yeah. So I'm not really overthinking this. Trust me. I don't really care that much about XYZ. So
I know, but Joseph, I'm going to tell you something. He will find you and he will hunt you down because this is going to be.
We will find you, Joseph, and we will have you killed unless it goes up. Then we're good. Then we're friends for life. Yeah. Anyway, okay. Thank you. Good catch.
Not me. It was Joseph. So thank you, Joseph. Appreciate it.
All right, let's take a quick look. We'll take a quick scan through our watch list today, and just to see kind of what's going on. You mentioned Lilly. Lilly's my biggest loser, by the way, today.
I think a lot of people had that problem in Lilly today.
Yeah, I did not have a very big position in there too, and it's still my biggest loser. We're going home slightly long Lilly tonight because we're a little bit trapped like a rat.
So if you were in August 8 options, would you stay there or would you roll?
No.
Okay, what would you do?
I'd roll to September.
To September, right? I mean, and in a product like this that doesn't have great markets to begin with in the monthly options, the weekly options would be off the board to you, right?
Yeah, off the board. I just roll to September.
Got it. Just wanted to make sure. Yeah. Talked to a lot of people about that. A lot of times they want to go into the weekly options, kind of keep it a little bit tighter. I said not something I would do. I just wanted to hear what you would do.
DraftKings had earnings last night. Stocks down 25 cents. Didn't do anything all day. Snap had earnings last night. Stocks down 2 days ago. Stocks down another 25 cents. That's a pig. AMD reversed yesterday's earnings. It's up $8. Uber reversed yesterday's earnings. These are kind of crazy moves. Hood just took out its old high, reversed its earnings. So, some of these stocks, you'd think there'd be a little follow through. There's none. And then you get a stock like UNH, which has tons of follow through, or a stock like UAL, which had tons of follow through, or a stock like IBM, which had tons of follow through, or Intel, or BABA. They all had all these, or Baidu, they all had those follow through, but then other ones don't. So there's no rhyme or reason.
No,
so random.
No, it is definitely random. There is no rhyme or reason. You are correct.
Yeah. It's very, very random.
Mm-hmm. I
mean, Meta had great earnings, but that stock has, it stuck around 770, 765, and we're still there.
Yes.
So.
Sadnov, even the S&P is down 16 with about 6.5 minutes to go. Does that make it an unchanged day? I know 20 was basically a crash. Is down 16 unchanged?
Yeah, well, we're a couple handles away from a crash, okay?
Understood.
I
got one more from my Taiwanese source. You did so good with the last one in XYZ. How about MP?
Ooh,
Material Corp. Been nothing but straight up.
I have that stock. It's up $4 today, and it cost me money.
Well, it has earnings.
Okay, yeah, that's a tough one.
Thank you, Ed.
Ed, thank you. That stock has been parabolic, hyperbolic, whatever you want to say. I'm going to tell you a couple things about this stock.
$4 expected move. Tell me a couple of things. I like when you enlighten me.
Yeah, and I'm going to enlighten you. Very difficult stock to trade, hard to get filled. We've been short it since it was 60. We're short the 60-65 call spread in there.
5-0?
No, 60-65.
60-65. Okay, so it was almost at the money yesterday. Yeah.
Yeah. So we need a down move in there. I'm not going to do anything else.
And you in August or September?
I'm in August.
With 15 days to go or 1 day to go?
Somehow I'm in August with 15 days to go.
Oh, 15 days to go?
No, I'm sorry. I'm August 15th, 8 days to go.
Oh, gotcha. Okay. And you shot the 60-65?
I don't like it.
Why would you put that position on? Man, that's horrible. Why would you do that?
Somebody told me
that's a good
to.
example. You got another 70 cents to lose, basically, or 60 cents left to lose.
Yeah, I'm expecting to make it all back. I'm expecting to get it all back tomorrow.
You could. I mean, that'd be a hell of a move tomorrow with 8 days to go. It's not going to go to parity, but I'll talk to you about option pricing some other day. We don't have enough time right now.
I need a gift from the gods.
4.5 minutes.
I got a gift from the gods today, in JOBY.
I thought I saw the stock move 50 cents or something like that.
It was down almost $2 at one point. I don't know what's down now. But
it's down $1.70.
Yeah, well, that's a little bit of a gift from the gods when you get a stock that drops 10% and you need it.
Mm-hmm.
So I needed it. I scratched my trade in there.
Very nice. Very nice.
Yeah, well, every once in a while, the earnings players give you a gift. Mm-hmm. I need a gift tomorrow in MP.
I hope you get it.
All right, let's bring in our boys. We got them in the green room.
GILD, you care about that? I missed that one too.
No, boy, you missed. What the hell were you doing today? You got one job to do. You miss. It's like.
I was trying to stay out of harm's way, Sadnov. That's what I was doing.
I mean, it's like. Look, think about like if you were go back and start working at McDonald's again. It's like you missed half the stuff I ordered.
I inherited this earnings thing because nobody else wanted to do it because there really is no good place to go to get everything. So it's.
I mean, you forgot my drink, my fries, the ketchup. You forgot everything.
Hey, but I don't forget about you, my friend. Just remember that.
All right, let's go to the boys. They're waiting.
Let's go overtime. Where are they? Where is it? There you go.
Hello. It's Chris twice, but I am here.
Oh, there we go. Chris, Ilya, how are you, gentlemen?
Ilya has a new nickname. Ilya, I got him right where I want him.
I got him right where I want him. I mean, we said the level on the S&P yesterday was 6,400, right?
Yeah, well, they were way over that this morning, my friend. Way over that.
They got crushed. They couldn't hold that level at all. So, okay, let's see. I am encouraged by the intraday spook. Let's see.
I'm encouraged by the intraday reversal too. Although overnight they spent all night above 6,400 in this morning too, but then they quickly gave it up this morning. I think a higher opening was what the Bears needed today, and obviously that's what happened. But the Nasdaq stayed strong. It's going to be up 50. We can't count this as a down day, unfortunately. Mr. Vecchio.
Although 20 minutes ago, it was a significant down move. Okay, just 20 minutes ago, and 10 spoo handles.
Batista, markets move.
Yeah, but I mean, considering Nasdaq is about to close here, barely in the green, considering how far it was earlier today, the price dynamics here are spooky.
I'm not giving it to you yet. I'm a bear. I'm not giving it to you.
Yeah.
What do you got, Vecchio?
Turn your mic on, Vec. Mic on.
Why is it going on? This is all day long with Zoom. Okay, so yeah, Stephen Murin's being appointed to the Federal Reserve Board of Governors here. After this, Bitcoin, gold, silver, all rallying. That's what I'm paying attention to this afternoon, that the market's thinking that the Fed is compromised. Hi-ho silver.
Hi-ho silver. So you're bullish on silver?
Yes. Very.
Six up days in a row. You know what the odds on having a 7th day higher in silver after 6
Not
up
very
days?
good.
50-50.
Never tell me the odds.
50-50 is what it is. It's 50-50.
Not
Come on, you're talking to. I'm a space pirate over here. What are you doing?
Not very good, Mr. Batista. Not very good.
But you were right. Bitcoin just caught another bid too. It's up over 18 now, 118 and change. So good catch there.
Interesting that the dollar isn't getting crushed against this backdrop. Like the pound is up, but for its own Bank of England reasons, everywhere else the dollar is holding up pretty well. So this is not like one of those sell America things that we saw before.
I would look to see how the dollar is doing since Murin was announced as the next Fed governor. Not pretty.
I mean, not
going anywhere either. It's not horrible, but I hate this rally of 20 handles. Hated it.
Well, that was the closing bell we had just there, inadvertent closing bell there. It went a little rogue on us.
Look at this. Look at this.
Even the S&P's unchanged. NASDAQ up 93. Sadnov, what came out?
I don't know, but it didn't help the good kids.
TTD is not out yet. Whoa. Akamai? What's...
Yakamai.
Akamai not out yet? RKLB?
Yakamai.
Not out yet? I don't know. I don't know what moved the market, but more aggressive buyers than sellers, Sadnov, much to your chagrin. Significant down day in the Dow, down 219. A significant up day in the NASDAQ, up 93. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with Overtime, gentlemen. Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
I want to play a game. It's a relationship game. So I'm going to ask
God.
you each a question.
Who loves the hardest?
Yes, yes, yes. So are you ready?
TikTok.
Who's more stubborn? Who's more public? Who's more patient?
These are two of the least. These are the least patient people I've ever met.
I'm going to say him just because he's a little older than me.
Who calls or texts more? And who do you think takes longer to get ready in the morning? Who's a better driver?
I drove a truck in New York City.
I can fly an airplane.
Who loves the Fed the most? Who's the bigger spender, do you think?
Me. Yeah.
Who's the alpha in this relationship? Who is more spoiled?
Oh, him.
Who do you think is funnier? Who is the better debater?
I'm gonna give it to him.
Dylan, you think you're the better debater? Are you the master debater?
No, he's good because he doesn't answer the questions, which is great for debating.
Trading is hard enough. Here's what liquidity is. You want to be like water. Liquidity is in reference to how easily you can get in and out of a position, from volume to open interest to actual price at which you can buy or sell your position. It's important for all traders, from stock traders to futures traders to options traders or even crypto. Tight bid-ask spreads and high volume are characteristics of good liquidity.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
I'm running snow leopard with this.
I'm a Mac. I'm a Mac. I'm a Mac. G. Multitask, MacBook handler, brother. iPhone in one hand, iPad in the other. Pop open top, Apple logo shining on the back. That's why all these player haters know that I'm the Mac. Easier to see a none with V.
Stocks recover late in the day. What does it mean? It's Thursday, August 7th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Thomas Westwater joining us in studio in Chicago today. Radigan's currently on a plane somewhere over the pond. We'll see him this weekend in New York. Thanks for joining us on the platform, Tasty Trade. If you're on the website, tastylive.com, come on over to YouTube. Tell us what you're trading, what you think of this action today. What excited you in this market? Was it the bond auction, which was really bad? Was it the fact that stocks recovered after Stephen Miran, one of President Trump advisors, was announced to be the next nominee to fill the open board seat at the Federal Reserve? Gold up, stocks up, dollar down once that announcement's made. Interesting. We turn our attention to the charts here where stocks do recover at the end of the session. S&P 500 down only by 0.01%, 6370. We have our NASDAQ up by 0.38%, Ilya. We are on the other side of an interesting day of action where on futures power hour, we were a little bit lower. Now we're back a little bit higher. Where does this leave us?
It's interesting where this leaves us because, again, the sort of song and dance I've been doing continues pretty much undisturbed. And we almost looked like it would have to change overnight this morning once the cash equity open happens. But then you get slammed back. And the same thing seems to come back where last week you made a high, you had a break. At the start of this week, you came to retest the underside of the range that broke last week. Today, you tried to overturn and get back into that range. Loosely speaking, that's around 6,400 on the S&P, that dividing line. Obviously, support and resistance and all these levels are never just a line. It's always a kind of fuzzy area around levels, but give or take 6,400. And intraday today, we get a very quick rejection of an attempt to get back above that area. So for me, nothing has changed. The path of least resistance looks like the markets are trying to find some kind of a top. They are attempting to, they attempted to undo that and failed. So we don't have confirmation of a breakdown fully confirmed, of course. We still have that support sitting around 6250 or so that's holding, and that's been holding since July. But we do have a very potent rejection that gives you a sense of where the market's head is at and where the conviction is. And that seems telling, and it seems bearish.
Thomas, a late day recovery here in the stock market, but my interest is in what happened in gold and silver here at the end of the day. I couldn't help but notice that once we got the announcement that Trump would have Stephen Miran join the vacant seat on the Federal Reserve Board of Governors, Kugler is giving up her spot, resigning early. He's going to fill out the rest of the term. Gold's 34.54 when that announcement's made. Bitcoin, likewise, gets a little bit of a leg up here, back over 118K. Silver prices enjoy the tailwind as well. What does it tell you that the market's initial reaction to this new Fed governor is to push up gold, silver, Bitcoin, and knock down the US dollar?
So I'm staying long my silver, and I like silver even a little more here, given the news. I think this move is going to secure more seats for him, right? By putting Waller on?
Because Waller's already on the FOMC Board of Governors. And so this adds him another voice. And once Powell leaves, Trump will have appointed 4 of the 7 governors at the Fed.
So I think this is a situation where it's good for gold and silver because the Fed governor change, it's not necessarily going to change the economic backdrop, but it's potentially going to bring rate cuts in, potentially more. So I think it's a really good outlook for gold or silver. I'm probably going to get long gold as well here coming up soon. But as long as the economy is doing well and you're getting, a slightly more dovish Fed, I think this looks good for both of them. And I think the price action is reflecting that.
So we're going to have growth in inflation a little bit up, but still positive real GDP on the other end of it. It's not quite stagflation, although it smells like it, Ilya.
Yeah.
What do you see here? I mean, again, this is perhaps the most important development of the afternoon. Bonds really unchanged.
Mm-hmm.
Okay, but gold, silver, Bitcoin all up on the back of this Mirren announcement. If I recall correctly, Stephen Mirren's one of the folks who's behind the formula,
yes,
the famous August 2nd formula about how they arrived at their tariff rates. So I don't know if that helps inform anyone about where Fed policy may be going, but I think it's certainly informative. Ilya, what does this tell you? What is Mirren's appointment and the reaction that you see immediately on the other side of this with the dollar index, gold, silver, Bitcoin? What does it say to you?
I mean, I think there's a couple of things you look at here. So the first thing is that it's probably encouraging for not creating a shadow Fed chair. There was a conversation out there that maybe what this Kugler vacancy will do is let the president nominate the person who he wants to replace Powell next year, to do the song and dance on Senate confirmation now, if that's necessary. But more importantly, to have that person in the room starting to shape conversation and really give a sense for just how much influence the fiscal side is going to have over monetary policy once Powell is out. And sort of to put a dark horse directly inside the FOMC. This is not that. In fact, the president hasn't mentioned Stephen Mirren in any of his conversation about the Fed chair, and said, we have the Kevins, we've got Waller, and one more, whoever that is. The Kevins being, of course, Kevin Warsh, Kevin Hassett. And maybe that one more is Bowman, since she has been an increasingly vocal voice for rate cuts. Who knows? Bowman, by the way, would be a little bit of a coup. We know the president likes doing things to kind of poke the other side in the eye a little bit and go, ooh, I nominated a woman, but you won't give me those kudos, whereas you'd give them to yourselves. Ha, 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 ha. So that's a thing. If we look at, I think, what this announcement is and how the president's talked about it, this is keep the seat warm until the end of the term kind of an announcement. And so I'm not sure it speaks to intent.
Don't you think the lack of job security is intentional?
Yes. Yes.
I mean, I think that's a read through here. Mirren's only a temporary appointee. Trump can swap someone else on there once the term ends if Mirren doesn't impress him with his decision making.
Well, yes, and we know the president wants rate cuts, and to his credit, so do markets. The markets want these cuts. The Fed funds futures structure, in particular for next year, is 50 basis points more dovish than what the Fed has as of June. So it's not like the president is out on a life raft out here screaming for things that nobody's thinking about or wants. No, the markets actually agree with him. They want these cuts.
Yeah, well, that's why we did the Futures Power Hour episode on Friday called President Trump Was Right.
Yeah.
Because the market is saying that we need rate cuts. And when you look at the data, but for OER coming in, but for the tariffs, you would see that OER coming in. It probably means that you'd have lower inflation readings if you look through the tariffs to a certain degree.
Yeah.
And we know that core GDP is falling 2.9% in the fourth quarter, down to 1.2% in this most recent update. Labor markets.
And break-even rates are telling us the markets are doing exactly that. They're looking through the inflation shock and going, on the other side of this is disinflation as demand cools.
And Thomas, I mean, one thing that bolsters this claim is if we take a look at how jobless claims have behaved recently, they've been shooting up. I'm going to pull this chart up on Fred here, if it would allow me, but there we go. Post-COVID, this is now a cycle high for continuing claims. That means people are losing their jobs and it's taking longer for them to find new ones. The pile grows larger. What says that to you about the state of the economy right now? If we're going to have shouldn't it be a good thing that we're going to have someone who's going to be a little bit more rate cut oriented, if indeed that's what the economy is calling for?
Yeah, I think it's good. And the market is, I'm not sure if the market's agreeing with Trump or if it's the market thinks that Trump's will is going to prevail. I think it could be either one. But I think the dollar is the only thing that's really, pointing towards a stagflation environment here. And you have to ask the question, is the market going to start to follow the dollar and what it says, or is the dollar wrong? But, if prices come up from tariffs, and it's looking like some of that tariff impact is coming on to maybe the labor market and prices in the short term over the next couple of months. Maybe we see that through the data more, but the equity market is still saying that, we are going to push past that without too much of a hiccup. So I'm of the view more and more lately that I'm going to get longer into equities and keep a view that the dollar is not going to continue to decline, but it's not going to rebound in any considerable fashion over at least the next 2 or 3 months. So I think that's how I'm going to play it here, by being long equities and maybe long or at least directionally neutral non-US dollars.
Ilya, the price action after we get the mirrored announcement isn't for a NASDAQ to weaken. It's not for the S&P 500 to go down. It's not for risk assets to do much of anything except for going up. I mean, we talk about learning to love it and drop the bomb, learning to stop worrying and just love the bomb, at least Dylan and I do. The market reaction gut here seems to be, oh yeah, we're just going to run this thing hot. You're going to get an easier Fed sooner than later. There's more pressure building internally for an easier Fed. Mm-hmm. And, if we still haven't digested the tariff inflation yet, then maybe lower rates help some businesses secure lines of credit that keeps them open despite the higher tariff levels, which means that more inflation is getting passed through to the economy because there's more vectors for aggregate demand. Mm-hmm. So we're just going to run this thing freaking hot.
I mean, maybe. That certainly is maybe possible. And running it hot would mean that the economy is hot, but it's not. Because we just saw the ISM numbers, which, by the way, the markets, we talked about this on Futures Power Hour earlier. The markets got two competing sets of service sector and composite PMIs this week within 15 minutes of each other. Mm-hmm. And the first one was really rosy from S&P Global, and the second one was awful from ISM. And the market said, we don't care about the S&P Global one, we care about the ISM. Now, that tells you where the market's head is at, as to what sort of news they're choosing to follow. It's the same thing in earnings, as you've made the point. Downside surprises are seeing a lot more price response, even relative to history, but also relative to current upside surprises. So when stocks see a positive earnings surprise, and this is data from FactSet, they're up, give or take, what the average would be, a little bit less. But when they get a downside surprise, they are down way more than is the historical analog. And so the markets are seeming to care more about bad news. We saw it last week with the markets fading the Microsoft earnings, fading the Meta earnings, fading the EU-US trade deal. the second quarter GDP numbers were terrible and gave us confirmation on the worst 6 months of consumption since the COVID recession 5 years before. The jobs number was terrible, and the revisions doubly so. Inflation is ticking up. The markets are clearly concerned about growth. It's why they want these rate cuts. So I think, yeah, okay, we're going to run it hot. Where's the heat? In order to get the economy hot, you first have to, A, stop doing things that cool it. And number two, you need time. Because even if you were to cut by 100 basis points tomorrow, it would take 12 to 18 months for that to actually show up in the economy.
The market would start behaving like that before the rate cuts are even delivered. They would start,
That's right.
Right? So, yeah, the economy might not have the bump to it, but asset prices would certainly move there.
Yes.
You know, I saw a great comment from Zero Hedge today, which feels like it's been...
If ever there was a loaded sentence.
Over the years, it has become more loaded. Someone was knocking them like, are you bearish or are you bullish now? And they pointed out the only rational thing to do to this market is swing from extreme to extreme because policy is seemingly changing on a day-to-day basis. So some days and I actually fully agree with that. Some days it's like, oh yeah, the sky could fall today. And the other days it's like, nothing matters. Just keep buying it. You know, what did President Trump say about how he keeps his stress low? He's like, oh yeah, you do this, you do that. Then an earthquake kills 400,000 people in India. And like nothing matters. Like that's kind of the market's view right now, that it's innocent until proven guilty. I mean, NASDAQ's here up by 0.41% after hours. S&P's back up by 0.02. I can't help but notice it's above the thresholds that make me uncomfortable, a little hot under the collar, leaning short deltas in equities, Ilya. Mm-hmm. Okay, Thomas, so how are you arriving at the place from a technical, quantitative, like what's the perspective that you have that you should be just shutting up and embracing the Radigan worldview of nothing matters, we're underestimating the good things?
I mean, that's kind of what I'm doing it through. Sold a put spread in NVIDIA. I think I'm going to get a little heavier into the SMH type plays coming up into next week. I think Tuesday we get inflation data, right?
Yep.
So, you know, if we get through that just fine, and even if we don't, if we get hot inflation, you know, it's still going to be around, 2.9, 2.8, somewhere around there. The market's known that we're not going to get, you know, inflation coming in too much, especially with these tariffs. And, you know, the chips are doing well. We get these exclusions from the tariff announcements. I think that's going to be the place to do it for at least the next few weeks. So that's going to be where I'm putting my money at. And it's just, you know, staying above the NASDAQ on the 9-day, the 21-day EMA. You know, I think there's definitely risk to the downside that you have to be cognizant of. But I'm just going to, you know, play this long. And, you know, we've been in a market where the dip buyers are coming in on the dips. And, you know, you come in on the dips, you sell the rips, and just keep doing that. I think it's a return to what we've been doing earlier this year.
Gosh, August and September scare me so much. Volatility goes up. Christopher loses money. That's been my life the past several years. Okay, so we have a S&P 500 that's doing a doji dance at the midpoint of its trading range over the past several weeks. Really, we can call it 5 weeks long at this point. We're finishing up the first week of August. We've been here since the first week of July. So 4 in July, 1 here in August so far. Ilya, you know, we had the move today. You and I were talking on Futures Power Hour about how we could potentially play this over the next week. Does this still feel appropriate? A short iron condor trade where we hold within the sideways trading range that's been carved out since early July? Yeah, that's what a doji in the middle of the range tells me, even with the recovery.
Yep.
Pinned. So I'm not leaning. I still have some longer dated, I guess, relatively speaking, it's longer dated. End of August S&P 500 puts that were purchased real cheap a while back. However, short term, I feel like the chop just makes the most sense. And maybe I'm missing this, Thomas. Maybe I needed Radigan and you to talk some sense into me. And maybe all the hurtful comments in the YouTube chat when Ilya was gone got to me that you're unfair and unbalanced. I'm kidding. That doesn't bother me at all. But I'm
repentantly unbalanced.
I know.
Because I think as a trader, if you have exposure in the market, you're unbalanced. You're either long or short. And if you don't have conviction in your idea, why do you have it on? And if you do have conviction in your idea, you should not be balanced.
Well, you guys both know I'm unbalanced. You unfortunately receive my text messages every day. So you know what's going on in the world. I do want to bring up something that you and I talked about earlier, though, because I've been looking for an explanation for why the market did what it did yesterday in the bond market. And I couldn't find anything.
What a weird thing it did. I couldn't find anything either.
Until our friend of the show, Michael O'Sullivan, sent over a link to, I can't believe I missed this, a comment made by @FullCarry, Ed Bradford on Twitter, who we've referenced here and talked about and have recommended as a follower if you trade bonds many times in the past. In his thread, it was noted, looking at order flow on UB, it looked like a sell algo was testing resting orders at the yearly opening print 118 and 24 ticks, a few bursts of 400 plus market sell orders, 5 of them under 1 second, and it dropped like a rock. That is the explanation being afforded for what happened in yesterday's market. Let's go down to the 5-minute time frame there. So it was in UB, and it was this mini flash crash. No one could figure out why. Michael O'Sullivan points us to this tweet in the FullCarry thread as a potential explanation. So thank you for that, Michael.
Yeah, indeed.
But outside of wonky fat fingering trades and making mistakes, which happens from time to time, I question how that could happen in something like the bond market, which is supposed to be so deep and liquid.
In the 30-year future of all things, which is deeply liquid.
Yeah, so it wasn't just ultras, right? ZB's knocked lower, ZN's knocked lower. Like a whole bunch of algorithmic trading just kicks in and starts getting dumped. Does that concern you that the long end of the curve is that susceptible to a mistake?
Of course. I think it has to. I think it has to concern everyone. You don't want crazy things to happen to very liquid assets like this. I think there's a couple of things that you take away from here, though. How immune are other assets? Pretty immune, because you did not see a panic in the dollar. You did not see a panic in gold. You did not see a panic in silver. You did not see a panic in stocks. So you don't see parallel wicks like this. So the market seemingly recognized that what this is essentially a flash crash of some kind of thing. And the market just assumes that and goes, okay. This doesn't have anything to do with us. This is not because of some macro thing or because something else has occurred. So the amount of hand-wringing is interesting. And also, we talked about this a little bit on Futures Power Hour, where the spike holds. There is an apparent breakout past the closing levels, going back, let's say, to early July. We flash back down to the last kind of shelf of former resistance turn support, and then swing right back into the consolidation range that we're in between the July closing high and ultimate high. So spike high. So it looks like the market shrugged this off and basically treated it in a cavalier fashion, which I suppose you have to believe them because the price action is what it is. But you would expect that when, of all things, the long end of the yield curve goes haywire, people ought to be freaking out. And so, on one hand, this is encouraging. market has a good sense, seemingly, of what's a flash crash and what's the real deal. On the other hand, you kind of start to worry about, like, okay, so if everybody is so complacent, would they know the real deal if they saw it? And then what?
Thomas, I mean, the fragility of the bond market bothers me. It says that it's pretty illiquid right now, that we could have a flash crash like that. Of course, if you were able to buy it up yesterday morning and you were watching, you made out like a bandit. But folks don't seem that interested in the long end of the curve all of a sudden. You and I talked about the 10-year note auction yesterday on Futures Power Hour when we were on air together. Today, Eli and I were able to talk about the 30. Both were bad. Yesterday was a D, F grade. Today's just a straight F. Bid to cover ratio of the past 6 auctions, 2.4. Indirect bidders, 61.9%. This auction, bid to cover ratio, 2.27. Indirects, 59.5%. 2.1 basis point tail. Demand is down. Foreigners not showing up. Do we need to look at the 10s and 30s auctions this week with a more of a raised eyebrow and say, could this possibly have anything to do with the tariffs that are being imposed at the end of this week that just went into effect today? Should we be worried about another late March, early April market for bonds is what I'm alluding to.
We're going down late March, April?
Yeah.
And I mean,
we're going into April, and then
I don't think so that much. I think the market is going to stay more focused on the changing Fed landscape, the political pressure on it. I mean, if inflation starts taking up from the tariffs, what does the Fed do now? Do you raise rates? I mean, is that something that's off the table? I mean, do you do that if you're on the board, if you know that the landscape is going to change next year and you're going to be politically more prone to just undo that, even if the data isn't making sense anymore? I mean, I think it's a confusing market to trade bonds right now. So I got out of my ZB long yesterday. I went through some pain on it for a couple weeks. I held it and thankfully got out with a good profit on it. But right now I'm going to stay out of bonds. I still have to unload my long ZN position. I'm nearly unchanged on that after coming out of the deep red. But I'm going to get out and sit on my hands for bonds for at least, until at least this inflation data comes next week and we start seeing more of, is this top that we've made out, is it going to hold? So right now I'm just going to sit out of bonds for a little bit. I'm a little confused by all of it. So just going to watch.
For bonds, at least in ZB, it has been one of the things that's working out here right now. Yeah, that's this one. The short put spread. The short iron condor. That's at least kicking still. The long calls are garbage. The two are balancing each other out. So at least I have that going here for me, Ilya. But with ZB, this is the halfway mark of where we've traded from the yearly high to the yearly low. So what's the trade? A 5.5 IVR is not the sexiest, most attractive thing in the world if you're looking to sell vol, but you got to take what you can get. It's still going to give the 3-to-1 risk to reward type of neighborhood. If you were to go 2 points wide on either side of the 1 standard deviation move, right? Just wrapped around like I have here, risking 3 to make 1, 62% probability of profit. Simple yeoman's work, not the most alluring trade in the world, right? But if we stay around and shop, as bonds seem destined to do right now, then it should work. And I think that's reasonable, right? I did get a question yesterday. It was actually Business Insider reached out to ask me, could the impulse from the data centers, the fiscal impulse from the data center spending, subsume, overtake the cost of the tariffs and vice versa? So I did some math on this. Projected capex on AI in the United States is around $400 billion over the next year. Tariffs are running for the 50th percentile American household just over $2,000. So if we have 130 million American households, you're talking about 260 billion in tariff-related expenses that were not there over the last year. So technically speaking, yes, 400 billion in AI capex is greater than 260 billion in tariff-related expenses, but it's only a net of 140. So you're not absorbing all of the capex from AI. I would also question that we're not seeing AI capex spending flowing back into household wealth creations. Data centers, according to the BLS, are not provoking significant turn higher in construction jobs in the areas in which they're being built. Data centers do not take a lot of people to employ. So while municipalities are welcoming them into their communities because they provide a large tangible property tax base, what the real effect is in the short term is that in places in areas where data centers have been built, according to the CPI data that we just had last month, electricity prices are now 6% higher. So you sprinkle in the tariffs. You sprinkle in tariffs. We think about the fact that America has consistently not done enough over the past 10, 20, 30 years to build out its grid. That doesn't mean more oil. It means more of everything, more gas, more nuclear, more wind and solar, hydro. So that way we can have a higher base load that is not susceptible to disruption. We don't have enough transmission lines, and we're building all these data centers. So yeah, I'm penciling this out as a win in terms of the data centers bringing more investment than the tariffs are costing, but I don't think it's that simple. I think it's probably a wash. I don't think the data centers are going to have a huge fiscal multiplier effect for where they're being built if the data continues to trend in this direction. So do the data centers really help the economy? It's not really more jobs.
Well, so this is what I've been harping on for a while with this, is that there is this picks and shovels phase in the build out of any new technology, anything that you're hyped about, anything that you expect to be transformational. I mean, obviously, we're not talking about incremental technology. We're talking about big transformative changes, telecoms, railroads, AI. And that at some point you get to a place in all of these narratives where historically, for as long as we have records, going back to the founding of the original 13 colonies and the speculative bubble around that, when you see all of these things occur, there is the, oh my God, this is the future phase. And there's lots of hype. And there's a build out, and then you invariably find that the hype brought you to overcapacity relative to the incremental dollar of immediate growth to come out of it. That you have all of this future ready stuff, but not demand and not ROI immediately. And then everything suddenly looks expensive. There's a wash. And after the wash, think .com bust, think railroad bust, think the South Sea crash, on and on and on and on and on. Invariably, you get to a place where you go, well, prices are cheap and the great and powerful future has not been dismissed by anyone, so that's the bottom, let's go. And then, of course, you get the long runway for things to get adopted and become the transformational technologies that they were always going to become. AI is more vulnerable to being near the top of a hype phase than, let's say, far away from that top.
I mean, I go back and forth on this almost on a daily basis, depending upon what data is in front of me. And I can't ignore the fact, I mean, this goes to that K-shaped recovery, right? These companies are spending hand over foot. It's going to make them buku bucks. They're going to get filthy rich shareholders wearing white bathing suits on their white yachts kind of success. I don't know why that comes to mind. But the real impact is nothing, because it's not like there are people working in the data centers and helping build the data centers that are leading to proliferation of, well-paying jobs where people can work and put a roof over their family's head as a result of that labor. So tech gets wealthier, K-shape. Labor doesn't benefit. Meta gets filthy rich. Okay, so Thomas, this doesn't seem like a bad thing then, right? Meta is up here, Microsoft's hanging around, Apple got a little bit of a lift. Apple's looking like it's really hot right now. Talk about breaking the downtrend it's been in this year. That wasn't really on the table a few days ago.
Mm-hmm.
Surely if Apple can rally, Thomas, what's stopping us? Why shouldn't I just get out of all my short exposure like Ilya's convinced me to get into?
Well, you should.
Join you. Oh, okay.
Yeah.
It's just that simple.
I mean, Apple is really, it's helped carry some weight in the market over the past couple days. Going back a couple of years ago, just even before the AI stuff, you normally would always expect Apple to be higher when the market is going higher. And vice versa, you'd expect market down, Apple's down. It's just such big weight on some things. But the exemptions from the tariffs, is really a big driver. And investing in the U.S., they said they're going to invest money. Maybe they don't get the best return on capital doing it here than they would somewhere else, but it appeases certain people. And that's, whether they're doing it because of that or, longer term strategy, I don't really know. But, and the market likes what Apple is doing the past couple of days. The exemption makes sense to buy it right now, clearing out, the billions and, tariff-related expenses they would face if not. But I think Apple is also, they're starting to dip their toes more and more into this AI thing. And I think that's just going to push forward the rush to get into the space and go, the pedal all the way to the metal on this. So like the picks and shovels thing on the AI, I think one of the big constraints is energy. So you need all this energy to power all this quarries and stuff. I think natural gas is going to be one of the things that really benefits over the next few years from this, because natural gas, you look at it, it's an underpriced commodity versus other things. So, investing in natural gas infrastructure right now to fuel this, expected increase in demand from these data centers is more than likely going to drive a lot of energy demand over the next few years and beyond that, 5 to 10 years. So, there's a couple companies, for natural gas that you could be looking at. I think maybe those are good long-term things. I don't think they're really reflecting it yet in their prices. Some things are. Oklo is a good one, modular nuclear reactor technology, things like that. All this investment into AI is going to come with a lot of investment into power plants, utility infrastructure, et cetera.
Yeah, the upstate near Rochester, there is a nuclear, I think it's called the Ginny facility. It's been around since like 1971. I think the entire nuclear facility is like this ball field. It's incredibly small, and it generates power for like 500,000 homes in the area. So why not do a bunch of those everywhere? They clearly work. I digress. Ilya, take the baton here for a quick second. Go over to the world of oil right now. I know it didn't do much of anything today, but fall. It seems to be changing right now in terms of how the market's treating it.
Well, so one interesting thing about oil that I think really bears mentioning today. Positioning wise, I don't think you have much of a change. You have a little bit of a break of an internal range, and we're still testing basically this sort of axis around where the broader range has been oscillating. So we're testing the underside of it, but we're not really breaking through. If you want to kind of eyeball where this is, you can anchor against September 2024 lows around 63.30, and then the top of the range that we carved out post Liberation Day, call it mid-April through beginning of June, around 62.20, something like this. So in there's a kind of a band, a kind of 62.20 2030 to 63, 30, 40, 50, something like that. And you're coming into the bottom of that. We're going to test it. We're going to see. I don't think the risk reward is very good to do much of anything this way or that. But until it is. But the really interesting part of this is we seemingly have escalating tensions between the U.S. and Russia because the president seems to really want to run into the direction of some sort of a pressure campaign to get Russia to sign a ceasefire with Ukraine. He's grown louder and more impatient. And then today, on top of all of this, we get the news that Israel is going to proceed with establishing military control across Gaza. And oil could not care less. There is absolutely zero attention being paid to these geopolitics. Now, it's not necessarily the case that these geopolitics are relevant, and you can very much make the case that they're not, because neither of these developments are really going to disrupt oil supply or demand, in my mind, in a direct sort of sense, especially in the U.S. But also, when you've had stuff that's emerged out of these theaters that's been headline grabbing, oil has been the same kind of reflexive jumpy that, for example, gold is. Even though there's nothing particularly geopolitically safe about gold, when geopolitics gets hotter, gold goes, whoa, okay, and kind of livens up. That was not what's going on with oil today. So while I don't think that I really buy a directional bet there right now, because on the one hand, you're near support and looking like you don't have the risk reward really to be a seller. On the other hand, you also don't have a reversal signal to meaningfully go long. So I'm standing aside. But just contextually, the price action today seems to me kind of mildly bearish flavored.
So, Thomas, I do think it's worth talking about the gold move here because it continues to run after hours, 3477.60 right now. This is the continuous contract. This would be an all-time closing high for gold prices. Why wouldn't we just want to get on board? I mean, I think you said you're getting ready to get long yourself. Why not right now? This thing looks like it's about ready to pop.
Yeah, I think that's what you do. The price action is telling you it's ready to get on a breakout here. So I was looking at getting long today. I didn't do it, but I'm going to do it tomorrow probably. So and stay long silver.
To that point, I mean, I have a 3,500, 3,550 call spread on right now. It's about a 46% probability of profit, risking a little bit under, well, risking 1 to make a little bit over 2. It seems like it's a reasonable trade in the short term, given what the breakout is starting to look like and smell like. And if you go to Z5, it's not quite there. If you want a daily chart, right? High close is going to be, I believe you, Mr. Candlestick. That's 3508.60. So we're not just there yet on GCZ5, but the continuous is poking up. Obviously, you don't trade the continuous. Gold up, silver up, Bitcoin up, dollar down. Ilya, the currencies looked a lot different earlier today when we were chatting. Now everything is, the euro got back to even, which is pretty impressive given what was happening today's market. I mean, the marked close is 116.55, 505. We're in here at 116.92 right now. Isn't the dollar all we need to follow to understand the state of liquidity and how the market feels about devalued or debased U.S. asset prices?
I mean, that's certainly a part of it, but I think when you look at how well the dollar ultimately holds up today, it's difficult to get particularly upset with some sort of a sell America dynamic. We had meaningful 50%-ish tariffs rolled out today. We seemingly are going to name a White House let's say, sympathetic character onto the Fed governor's board. All of these things are reasons why the dollar might go, okay, this is getting a little fuzzy. This might be a sell America kind of a thing, similar to April. And you're not seeing that at all here today. The bonds are not cratering, and the dollar is holding up, frankly, better than I would have thought. In particular, you look at the pound, and it's up for its own reasons, but dollar yen is very well anchored. The euro couldn't sustain the run. But look at dollar CAD. Look at dollar Swiss. All of these things are, and helpfully we now have Swiss franc futures on the platform.
Yes, we do.
And we can see that. This is obviously CHF USD. So this is the Swiss franc. It's the same thing, the same story with the Canadian dollar, where the dollar broke out, it's pulled back, and now it's holding the bounds of the range. It's holding former resistance as support. So the dollar is really holding up here much better than you might have anticipated. And I think this sort of goes to this idea that the dollar is once again en route to becoming a haven currency. That you're getting to a place where the Fed is far from cutting. There's not a meeting until September where that could actually become actionable. The markets are convinced it's going to happen. So there isn't a speculative interest there to keep the dollar underwater, where you'd have some room for expectations to go, there's not going to be a cut. Okay, now there is going to be a cut. No, that ship has sailed. It's done. And so when you look at sort of what the dollar has set up here, yeah, it took a wallop on the jobs report because you did go from no September rate cut to backs on for a September rate cut. But the markets are anchored around the same 50 basis points for this year that the Fed told them in June and March and January. So when you look at all of this, December into January, when you look at all of this together, it looks more like, okay, if there's risk aversion, this dollar is going to rally. And it's not going to rally for yield reasons. It's going to rally because money's going to cash. And now that you've diffused the sort of Liberation Day sell America dynamic, and you've realized, oh, we're not crashing the system. We're just going to be very bull in a china shop with how we bend the system to what we want. But we're not going to attempt to self-immolate the dollar and U.S. Treasuries-based global financial order. Well, then the dollar can get back to being a haven. And so I'm watching this carefully, sort of in the context of what I think we're seeing in equities, which is this kind of begrudging hold. And it really is begrudging because it's begrudging in the face of good news. Like, frankly, the stock market, were it to get the same news flow a month or two ago, would be rallying and making highs. And it isn't.
Thomas, I question, if like, sorry to interrupt you there, Ilya, but I think Ilya raises a good point, like, but for dollar weakness, would stocks be doing as well as they are? And if the dollar is going to bounce back, what does that mean for the broader equity market outlook? But dollar bouncing back and gold and silver going up, that seems like a really risk-off kind of world.
Yeah.
Yeah, I mean, you would expect equities would be selling off in that environment. So I mean, one thing I like about being long both equities and gold, silver here right now is if that happens, you're going to be kind of protected. You're going to have safe haven flows going into the dollar or going into the dollar and gold. You'd have equities selling off. I'm not convinced that the dollar is going to stage any kind of sustainable rebound until tariff risk and things are taken off. So I think you need more clarity. I think if the dollar's railing in a safe haven manner, it's maybe a more dire economic situation. So where the Fed would be even more inclined to cut. I'm not sure I'm there on my view. I can definitely see that happening, but for the way I'm playing it right now, I'm going to be long non-US dollars, long currencies, long gold, silver, and staying out of bonds for now.
This is the last show of the week, so why don't we end the show on a lighter note? This popped up to me a little while ago, and it came across as very funny. It's about how some cities are handling Waymo and other automatic cars coming in. This comes from Timothy Lee. He's a former Ars Technica writer, so very much in the weeds of self-driving vehicles. Apparently in Massachusetts, in Boston, city councilors are worried that these companies are doing things like, mapping streets without community input, and maybe saying that it's triggering that Waymo is going to replace drivers. And what happens if we get rid of all the unions? Folks, in the most strident terms, if we cannot allow another international dock workers union to rise up around electric vehicles and automated vehicles, it's absolutely ridiculous. It's the kind of thing that prevents progress from moving forward. Jobs will be replaced, but we don't want people just doing menial work. It's not fulfilling. Work needs to fulfill people. And I don't think anyone dreams of being a permanent taxi driver their entire lives. So, geez, get it together, folks. Deliver on stuff. Don't waste people's time saying that they have to get a permit to map cities. Go complain to your town board to do more. My town board is doing great, by the way. Safest town in New York State, 2 years in a row. That's that New York pride, Ilya. But that overtime's out of time. We'll be back later next week, Monday through Thursday, 4 p.m. Eastern, 3 Central, right after last call. So for Thomas Westwater in Chicago, Ilya Spivak in San Francisco, I've been Chris Vecchio in New York. Good luck trading. See you soon.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily, covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
With rate cuts back on the table, are there any trades that you're watching in particular?
Well, rate cuts have never been off the table, but every time bonds drop, I think they're a buy.
Not really watching any specific trades in the interest rate space. I do keep an eye on, the futures options like the ZBs, the ZMs, the ZTs to see if there's any volatility types of plays that I can integrate into them. Unfortunately, I don't really feel like there is a really great micro future to trade the changes in interest rates just yet. I feel like they need a little bit more volume, but when those get a little more active, that will be definitely one way I will be participating.
Yeah, I am. I would say honestly the dollar trade, and I know that is one trade that has been very crowded as far as a lot of people are short the dollar. And if you look over the last couple of years, typically when interest rates are higher, the dollar is higher, and we've seen the opposite. So it would definitely be the dollar and how I'm going to trade that based on what happens with rate cuts.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
People are always asking where.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
It's another inconclusive day for U.S. stock markets. They attempt to rally, but then midday gets slammed back to a little changed result. Ultimately, the S&P 500 ends up finishing the day essentially flat. NASDAQ ends up with a little bit more of a rise. Russell basically flat. And so we turn our attention elsewhere because while there was no shortage of news on the menu, the markets are not finding conviction, at least on Wall Street. And with that, we turn to the world's second largest economy and what might be starting to stir there. This is Macro Money. I'm Ilya Spivak, head of global macro here at Tasty Live. And what we've found here, it would seem, over the course of the past 24 hours is maybe, finally, some signs of life. There was a set of trade numbers that came out that maybe give a little bit of hope to folks that have been looking for China's economy to maybe, just maybe, finally find a way out of the morass that has contained it over recent years. And with that, maybe give a little bit of a backstop to weakness occurring elsewhere. And of course, a little bit of a level of support in the event that the U.S. economy starts to slow. Because, of course, that has been a running concern for markets. And so with that in mind, we're going to look through what this data was, why it looks like the data was significant, and why that may be something that merits paying attention to in the context of what's going on here from a broader macro perspective, because, of course, one of the key stories that we've been following here has been this idea that basically since the middle of last year, the U.S. economy has been the only game in town. And with anemic Europe and anemic China, it is very difficult to imagine how you don't get into a global recession scenario were the U.S. to falter. And increasingly, especially over the past several weeks, the economic data has suggested that maybe that faltering is finally starting to come together. At least the markets certainly seem to be concerned along those lines. And so what we'll do here is look at the data, look at why it's so eye-catching, and then see if we can't look across the breadth of Chinese economic indicators and see if, in fact, something different is starting to happen, and if it is, what the trade is in that difference. So, the key data. Import and export numbers came out overnight, and we can see that on both fronts, you have much better than expected outcomes. You were looking for a 5% rise in Chinese exports year on year, which you ended up with was 7.2. That doesn't look as impressive as what happens on the imports side, but nevertheless, it is a meaningful beat relative to forecasts, but a beat within the recent range. But it's really this imports number that ought to be grabbing our attention. 4.1% year on year is oceans away from a 1% decline that was on the menu here for expectations. And taking these apart sort of one by one really paints the picture. So these are the year-on-year numbers over the past year for exports, and we can kind of see, yes, this is the third consecutive month of improving export growth. We keep kicking the can down the road on tariffs. There keeps being this impetus to front-run those tariffs, so this makes sense. If this was April, right, we had this surge to front-run the tariffs at the start of the year because we knew that they were coming. There's a leg lower in April as Liberation Day and things like that took their toll. Another leg lower into May as the dust settles. And since then, sort of the perpetual kicking of the can has helped us to kind of start this recovery. But ultimately, we're kind of mid-range on where we've been, and so there isn't anything to scream too loudly about. It's a different story when we get to imports, because one of the biggest things, of course, that has held China back has been the persistent anemic state of domestic demand. And so you look at this then, and you see this jump of 4%, and it is very clearly a strong departure from anything that we'd seen for a year. Last time this looked this buoyant was July 2024. And this might be something of a game changer if it is in fact pointing toward something that is lasting and something that is indeed rooted in domestic demand starting to perk up. Now, on the export side, things are relatively easy to explain. When you start to look at those numbers, what you see is that shipments to the U.S. are actually down. And that's, of course, emblematic of what's going on. But when you look at what's going on with some of the other key destinations, shipments to Taiwan up 19%, shipments to Australia up almost 15%, shipments to ASEAN up 16.6%. Shipments to the U.S. fell 21.7%, excuse me. So and that's after a 16.1%, all these numbers year on year in June. So it looks like there is a reorienting of these supply chains. We'll see what the White House does with secondary tariffs, but you get the sense for why exports are creeping higher. The pathway to get stuff from China to the US seems to have elongated and now runs through these ASEAN economies as a middle step, maybe through Australia, maybe through Taiwan, and creates a sort of situation here, maybe, where things can even out. When you look at the imports side of things, that's a different story, because you get the sense that maybe domestic demand is finally starting to get a little bit of life from all the stimulus that China has introduced. Because as we can very clearly see here, foreign capital allocation continues to flee China. This is foreign direct investment year on year. And you can see that although the pace of decline has cooled somewhat in the middle of last year, we were looking at just absolutely eye-watering levels here, around 30% year on year. Now it's kind of anchoring around 10, but that's still a tremendously powerful capital spigot, wide open and leaking money out of China. But at the same time, this credit impulse index from Bloomberg that measures the share of new loans in GDP, that's showing a little bit more activity. So you're starting to get into positive territory here. The level is a little bit higher, so now we have a positive contribution from new loans to GDP for the first time in quite a while. Over the past several months, that's started to move. And the year-on-year rate for how quickly it is growing, that seems to be picking up as well. So maybe, just maybe, all of the stimulus that China has delivered over the past, really over a year, maybe that's finally starting to rouse domestic demand. And whether it is or not, we're going to be able to see as we look at what households' preferences have been. One of the critical considerations here for looking at what's going on in China has been not just whether there is take-up of new loans with all of the easing that we've seen, but whether that money is actually being spent to generate demand. And the story has been, frankly, disappointing. Now, at the top there in the yellow, we see Chinese household deposits, time and other sort of similar deposits, and then in the red, demand deposits. So consider this as a kind of difference between demand deposits being sort of money on hand now, checking accounts type deposits, and the yellow time deposits being savings and CDs. So basically accounts designated to saving, to holding money over time, less liquid, not earmarked for immediate kind of pocket money spending sort of cash. And what we find is that there was a kind of range for how much capital goes to one versus the other. This is a ratio of the two that prevailed from the global financial crisis into the COVID recession. And for essentially 12 years here, there was not a whole lot that changed. It was fairly steady, fairly even. And once you get the COVID recession, you get this, of course, lockdown response from Beijing authorities. And there is this dramatic shift where households seem to have lost confidence and are inventorying money, stockpiling money, and refusing to spend. And that, of course, is a huge, huge headwind for China's economy. And we can see here, I mean, these levels are the highest. This is the biggest disparity in favor of saving versus spending on record coming out of China. And so if all of this is going to work, if all of this new borrowing actually turns to action, it's got to get spent. And we're going to have to wait and see to know if that's occurring here. But so far, it hasn't worked. Now, if we looked at the most recent PMI data, this is the official numbers from China's Federation for Logistics and Purchasing, as well as the NBS. So these are official government figures. We can see that for July, we basically have standstill. It's a very interesting set of figures here to look and say services and manufacturing are lower than the composite produced of those things looks like. It's an interesting statistical development here. How that composite number is north of the services number is an interesting data quirk. But nevertheless, everything is hugging the 50 level. And that, of course, is neither growth nor contraction in the logic of PMIs. That's standstill. So it looks like China's economy is idling and basically has been idling since it settled into standstill in the back half of 2023. This right here is the reopening from COVID restrictions. So you can see that there's a initial surge in demand, but then that very quickly fizzles by the end of the first quarter of 2023, and the economy basically settles into this lifeless drift. But when you look at the numbers, competing PMI numbers, structured the same way from S&P Global and Caixin, what you find is that at least on the services side, you have had a little bit more, whereas manufacturing still very much anemic and indeed was in contraction territory in July. This perhaps begins to dovetail a little bit with what we're seeing on the import side. So maybe, just maybe, Chinese domestic demand is starting to appear. Now, these are flimsy things to hold on to for the moment, but they are nevertheless eye-catching, especially as we head into this tariff deadline for the U.S. and China next week, and it does appear like there is a taste for some sort of a deal at the White House. Now, of course, what all of this is aiming to overturn is this apparent total lack of demand appearing in China's GDP numbers, and indeed, most recently for the second quarter of 2025, the problem has only deepened. So we've gone over this a bunch of times here on Macro Money, but we will do it again just to make sure that we're all up to speed here. This is a little bit woolly on the economics analysis side of things, but what we have here in the solid line is real GDP, and in the dotted line, nominal GDP. Real GDP is nominal minus inflation, yet it is running hotter than nominal. So you can see here the solid line is above the dotted line, and that's been the case for 9 consecutive quarters. This right here is the spread. And what you see here then is nominal minus real in normal circumstances gives you positive results because nominal is running higher than real. And in this circumstance, because real is running higher than nominal, their difference is negative. And why is this significant? So nominal is all of the economy's output without adjusting for inflation, the value of all of the economy's output. But some of that value isn't more goods being made. Some of that value is inflation. So if there's more demand, and let's say last quarter you sold 10 things, and this quarter you sold 10 things, but the value of the 10 things you sold this quarter is higher because more people wanted them, nominal GDP is going to look like it rose, even though you only sold 10 things again. to get a more accurate view then of output, you strip the inflation component out of the equation. You end up at real GDP and you go, okay, sold 10 things last quarter, sold 10 things this quarter, nothing has happened, we're not going anywhere. Now, what then it means that real GDP is running above nominal is that inflation component is negative. So maybe you sold 10 things last quarter, and maybe you're trying to sell 10 things this quarter, but they're not selling because there's not demand. And there's a price adjustment, a kind of discounting to try to entice buyers back to actually buy the stuff. And so when you see this negative coefficient on the GDP inflation component, the implied inflation component, what you're left with is there is no demand. There is oversupply and not enough demand, and that's why prices are falling. They're falling because of inherent discounting and trying to get demand to appear at some lower price level where inventories can be absorbed, where all the stuff that businesses are trying to sell can actually get sold. If it's not selling, you cut the price. And what you find is that over the past 9 quarters, China's economy has had virtually no demand because prices have continued to fall. And indeed, in the second quarter, that fall was the most pronounced of the series here. Going all the way back, not surprisingly, to the first quarter of 2023, where, of course, this upswell briefly occurs. So, this is the battle. If China can get some sort of domestic demand to finally appear, if they can get consumers to finally start spending some of this money they've been hoarding, maybe this starts to turn. But if this doesn't start to turn, well then, in a situation where the U.S. economy might be slowing, and we can go down the list of reasons, weakest consumption in the first 6 months of this year as relative to the first 6 months of 2020, the COVID recession. ISM data this week telling us the economy is at a standstill across manufacturing and services. The jobs report showing woefully fewer jobs created than anticipated and dramatic revisions lower to prior months. On and on and on it goes. If the U.S. economy is in fact slowing, the problem since the middle of last year is standstill in Europe, standstill in China. And between those 3 economies, the U.S., the Eurozone, and China, you've got 58% of global GDP, and the remaining 42% are mainly vendors to those 3, which means those 3 are where demand comes from. Those 3 are what keep recession at bay. And Europe and China have plainly not been carrying their weight. They've been idling. Europe has been on and off flirting with a mild recession, going back to at least the middle of last year. Whereas China has had this issue that we see on the screen, a near total absence of demand. So if in fact we are seeing signs of life begin to stir here, then we would need to start to see it and that, of course, begin to change the landscape on a macro level to something a lot more encouraging. We're going to find that our next indicator on this over the weekend, where China is going to produce its latest inflation data. The expectations here, as we can clearly see, are not exactly rosy. The upshot is that we are going to get another negative reading on CPI and another negative reading on PPI, wholesale inflation. Of course, that one is not terribly shocking. In fact, it's been in various versions of negative territory going back to before the reopening from COVID in 2022. But this would be the key here, this CPI series, because it would be here that you'd look for a little bit more of a demand pull on inflation. If, in fact, consumers are starting to wake up, if the pickup in imports is something with legs, if the pickup on the services side in at least one set of PMI numbers is something to then pay attention to, and we're starting to get a little bit of these data points coming together, then what you'd expect is a higher CPI number. Better than expected in some way, shape, or form. And if that's the case, well, maybe we're finally starting to find some opportunities in Chinese markets. Now, we can see here, this is the CSI 300 index. This is essentially China's equivalent of the S&P 500, a sort of catch-all for the most significant listed names on exchanges in Shanghai and Shenzhen, the two important exchanges. And we can see here that the last time this really stirred was when it looked like there might be big fiscal stimulus on the menu, or at least appetite for big fiscal stimulus had occurred, with the hope that it would create consumer demand, which is, of course, exactly what we're talking about. Now, we can see that that hasn't materialized and we've been idling. But perhaps it is still on the menu to appear. So if we can take a look at sort of where the tops and bottoms on this range are, if we can get through here, if there is in fact a sign in these markets that perhaps we're finally getting to something like relief and there is a break this way, well then, first of all, of course, Chinese stocks and ETFs like FXI and ASHR and other reflections of Chinese demand, maybe the Australian dollar, that suddenly starts to look interesting. But from an even bigger macro perspective, you perhaps have the kind of backstory, finally, where you're not so worried about a U.S. downturn from a broad risk sentiment perspective, at least to the same extent, and then maybe, just maybe, the architecture of the landscape for Wall Street starts to change, where it's not that you have to hope that the AI bubble keeps inflating, it's that you can actually have some confidence in underlying growth itself being better than just hoping the U.S. doesn't misstep. And that is Macro Money for today. As ever, we are here Monday through Thursday, right after overtime, a show that I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'm back with Chris for Futures Power Hour Mondays and Fridays, as well as for First Call alongside Tom on Sundays. Writing for the News and Insights portion of tastylive.com, commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money will be back next week. Happy trading.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
First of all, I'm sitting in the captain's seat. I've never been invited to come sit in the new captain's seat. But what I'm concerned with is the size of these screens. And he's still doing this.
Snow, let's take a look.
They did not hold that rally at all.
Phil, you got a partial.
973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this to me. And then, you know what? Money goes to money. You did it. Good job out of you.
Yeah.
I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours.
It was a great show, very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math would be really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Craig in New York City, what's up?
I just want to say, I've been with you since the very early days of Thinkorswim, and traded all kinds of markets here and there. And I got to say, I could be off so much worse if it wasn't for what you guys have sort of drilled into me over years and years and years. And so I just want to thank you, because you could have easily just taken the money and run when you sold Thinkorswim, and you didn't, and you started this. And you basically have just given me this full education in this thing that was completely foreign to me many, many years ago. And so even though I've lost money in the last few days, you've saved me a lot at the end of things. Like, losses could have been catastrophic, and they're not. Cool. So I appreciate you.
I hear you.
I appreciate you guys. Thanks so much.
Thank you, man. And I appreciate you holding on the line to say that to us. So thank you.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Trading is hard enough. Here's what liquidity is. You want to be like water. Liquidity is in reference to how easily you can get in and out of a position, from volume to open interest, to actual price at which you can buy or sell your position. It's important for all traders, from stock traders to futures traders to options traders or even crypto. Tight bid-ask spreads and high volume are characteristics of good liquidity.
Today's Trader Taste Test, Tom has a fever, and the only cure is the KFC Chizza. What? Let's go.
Let's see what we have here. Okay, I don't think it's elevated chicken parm, okay? I don't know.
What are your thoughts? Just visual presentation.
He's just going in with his hands.
It's pretty beautiful. Let's see. I'm going to be totally objective.
Okay.
Impossible.
Okay, Jamal, you're black. We're eating fried chicken.
Yeah, right. I know it's on there.
It's warm.
No. I like it. It's hot. It's delicious.
It rivals the chicken parm in prison.
Out of 5 stars, what do you give it?
1. I'm going 4.2.
Wow.
I'm easily impressed, as Tom will tell you, though, but I think it's very good.
3.5 just because I like Kentucky Fried Chicken.
Come on. Do you want to be KFC's power?
3.7. I gotta be real. 3.7.
Okay.
Because the chicken's good. I mean, the chicken's not bad. The sauce tastes like pizza sauce, like bad pizza sauce. I like it.
Out of 5, what do you give it?
3.5.
That's what you do. What?
He likes it. 3.5 stars. He doesn't like it a lot. Is what he's trying to say. It's an elevated. It's an elevated. It's an elevated nothing. It's a chicken. It's actually pretty good.
If you missed the live show, here's our cherry on top weekly recap.
First of all, I'm sitting in the captain's seat. I've never been invited to come sit in the new captain's seat. But what I'm concerned with is the size of these screens. And he's still doing this.
Snow, let's take a look. They did not hold that rally at all. Phil, you got a partial.
973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this
To me. And then, you know what? Money goes to money. You did it. Good job out of you.
Yeah.
I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours.
Eddie in Texas, what's up?
I'm trying to determine whether or not I should actually feel experienced enough to grow my account. I've been trading for about 1.5 years. I've done all the homework. I'm not sure if it's just a market that I got lucky in the past 2 months.
Like, how many trades have you made?
This year so far, about 100.
Yeah, so if you've made 100 trades and it's working for you, then that's not luck.
No.
That's not getting lucky. That's being freaking smart and doing the right thing. Because you took advantage of an opportunity is not getting lucky. You made 100 trades already. Back when we started building this kind of software, an active trader made like 20 trades a year. What used to be 5 years, you've packed it into a few months. I mean, I wouldn't discount anything that you've accomplished so far at all.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
That's how we doing, brother?
Feeling good. Yeah, Starbucks made a move that I needed today. My DoorDash risk of the week did not pan out for me in any capacity, but we managed to get out of that. It's always nicer when you lose a trade and you're still able to get out of it, as opposed to, like, especially in a super binary trade like the one that I had on DoorDash, getting stuck with it and it's just at zero and you got to sit there and look at it all day.
I hate that. Sometimes, bro. Sometimes I'm closing this at 2 days left. I'm trying to just get this out the.
Hey, I'll do that too. I'm like, will anybody pay the penny for this position? Like, please, somebody give me a penny. So yeah, but holistically, yeah, good day for me in the market. Feeling good. Vibes are high. Week is drawn to a close.
I mean, I feel like
2 rounds of golf playing this weekend.
2 rounds of golf. I was eavesdropping earlier. You hit a birdie as of recent.
I did.
Let us know a little bit more about that.
I did. Yeah, made a birdie on a par 5. Birdies, they don't flow very freely in my golf game. It's sort of a few times a year type of situation. But yeah, played actually one of the better holes my entire life last weekend. It went, it was par 5, and really it was just the second shot with the 3-wood hit like a beautiful 220 yard, rolled right up onto the green, set myself up nicely. Had an eagle putt. From very far, but yeah, managed to lag that up. Get a birdie home. It's a big deal when Gus makes a birdie. That's cause for celebration. So yeah,
I like that. I haven't been golfing yet still, but I don't know how well the Wii golf translates to real life. But if it's close any at all, you might be hitting some birdies
here.
Go
to the driving range sometime. You can swing my clubs around, see how things are feeling. It's a tough sport, and
it is a tough sport. So you got to really mentally lock in on that. And exactly what I'm trying to do with some of these positions in the portfolio, Gus, because Eli Lilly really bad today. But anyways, some news coming out with Eli Lilly and a lot of those weight loss drugs not looking too hot. We talk about the weight loss drugs. It's like a cycle.
It is.
Every decade we have some type of weight loss drug kind of company trying to do something. I don't know what it was like 5-10 years
back
ago.
when we were a proper country, you just got back when we
back. Oh, that's funny. No, but other than that, we've had a pretty crazy week over the last couple of weeks. We're finally getting some earnings out of the way. We'll be able to put in more positions of the sort on that. I know I got some positions to manage tomorrow. Before we get into the segment, anything else on your end?
Yeah, no, I don't really have anything else on my end. We're kind of drawn to the end of earnings season here, and I think we're
thank goodness
pretty much all the Mag 7 names. But yes, thank goodness. It feels like it'll feel like 1 month until we're just right back here again. A couple of chats here. Edward, I've never had an eagle either. The day may never come. We'll see.
Not with that attitude.
Drinks all around when Gus gets a birdie. Yeah, I'll buy everybody around. Let's do it. Everybody, let's link.
That's no eagle or birdie with that attitude. Come on, we're locking it in. Let's go.
The birdies come sometimes. Okay, Eagle, that's sort of a different level. I don't know if I'm ever going to get there. We'll see. Also worth noting, I shot 120. Shot 120 with a birdie and 3 pars, and I shot 120. So I'll let everybody draw their own conclusions about how that can happen. But yeah, let's jump into these slides here. We're going to talk OpenAI. GPT-5 dropped out today. Not dropped out, dropped to the world today. OpenAI released GPT-5. They're making it available to everybody for a short time, and then it will shift to only paid users. It's supposed to be night and day from GPT-4, according to Altman and all of the reports that I've read, and we're going to get into the specifics here a little bit. But we're also going to talk about some broader societal implications of AI and where this trajectory may be taking us, which is a very interesting conversation. So we can jump right in. So first of all, GPT-5. You want to take this one?
No. What is GPT-5? What are we getting into?
About it. Yeah. So this is the successor to ChatGPT-4. OpenAI is ChatGPT. I know these all get very difficult to keep up with the GPTs and the Claudes and the DeepSeeks of the world. They get mixed up. It's multimodal by default: text, images, possibly video, audio. OpenAI also has the VO suite, which is their video generation suite. Longer memory, rumored to support over 1 million tokens. Really? Is that right? Damn, that's a lot of tokens.
Right.
Stronger. What is that? Stronger agentic capabilities, multi-step tasks with less guidance. And the agent features are kind of what I'm most excited about with this update, actually, and we'll get into that in a little bit.
Okay.
But I think that's sort of the next level that chatbots can take on a retail individual sort of basis. It's also more personalized, better memory for user preferences and context. That's another factor that I'm excited about because I cannot stand how often I have to remind ChatGPT things about myself. And honestly, that's kind of a crazy statement I just made that I want this thing to collect more
absolutely.
data on me.
That's on.
But man, it would really ease my experience if it does collect some more data.
Yeah.
Everybody has my data anyway, so who cares? And then lastly, more energy efficient. This is obviously something that they were trying to address. There's lots of conjecture online about how much energy these things take. And also, let me just say in no uncertain terms, I don't know where this 5 gallons number came from. It does not take 5 gallons of water to do one search query on ChatGPT, you guys. It's nowhere close. Furthermore, the water does not just go away when they use it. They reuse cooling water over and over. If it does evaporate, then it just enters back into the water cycle. So lots of water usage, yes, but I think it's become a bit exaggerated.
Yeah. I got to say, I think I'm really excited for the improved reasoning, speed, and the consistency. ChatGPT is great, don't get me wrong, but sometimes you have to remind it with certain reasoning capabilities, and then sometimes it'll hit you back with you're absolutely right.
Yes.
Great catch.
Yes.
So those type of capabilities I've always been intrigued with. I know Sahil, sometimes he'll play around with asking it questions and try to break it. Now respond to me, and trying to work around it, and it always has some smart function. It gave us the thumbs up when we said for it not to speak with us. So
that's funny.
The reasoning capabilities is always going to be exciting.
I'm definitely excited about that as well. And also, I know that something that was expressed by Altman in his press conference today is that it's going to do a better job of telling you when it cannot do something. Okay. Which I think that is also going to be a big time saver, because I recall in my senior year of college, I was trying to do some super high level thing on Excel. It was econometrics. Like we had a bunch of data from a study and we were trying to apply it. It's not really relevant, but I was trying to have ChatGPT aid me in developing this Excel, and I came to find after more than an hour of trying that it simply could not. The capabilities just weren't there, and I could have been saved all that time if it just said, I don't know how to do this, and that would be good. And then beyond that, also just it seems like it's going to be much more careful. I feel like especially when you have it do something in a web search capacity, it will often really get dates mixed up or give you very 100%. Old information that's not relevant anymore. Like for instance, earlier this year, I was writing an article for the magazine, and I asked it when Brian Niccol took over as CEO of Starbucks from Chipotle. And it straight up told me, you are mistaken. Brian Niccol is the CEO of Chipotle. The CEO of Starbucks is the old one. I don't remember the guy's name. And then I had to say, no, Brian Niccol is the CEO of Starbucks. Then it hits me with oh, you're absolutely right.
Right, you're absolutely right.
I appreciate your attention to detail. So,
but you see how it hypes you up, validates you first, you know what I mean, and then lets you know.
It does, and I honestly feel like that's a big problem that it's had this entire time as well, is that it leans too much on the side of validation. When sometimes asking clarifying questions could be very valuable. Yeah, it just really wants to do exactly what you want it to do. And even sometimes I will say, please ask me some questions before you dive into this process, and it does not listen. It just starts going.
I know. I think I'd seen a tip online. It was talking about how to communicate with your ChatGPT. One of those tips was telling you, please be very objective about this. Give me different angles of reasoning, thought processes, and all the things of this sort, because it does have a little bit of bias built into it. And as it learns us, it has our own biases.
Which is what scares me when I hear people talk about, ChatGPT is a great therapist. Right. It's like,
bro, this
thing is just going to validate whatever you say.
Well, this is why I thought TikTok was an extreme echo chamber. It's because no matter how we're feeling, no matter our opinion or viewpoint, it's going to put you in that box to where you hear the same opinion. You know what I mean? An extreme echo chamber. For the better or worse, I think it could work on both sides of the spectrum, but we'll get into the second slide here.
Yeah, we can jump over.
The rise of AI. 1956, AI coined at Dartmouth conference. And as we go through these bullet points, or as we go through these dates, let us know when you first heard about AI. I think you said 2011.
Yes.
I can barely recall mine, but let us know when you first heard about AI. 1956, AI coined the Dartmouth conference. 1997, IBM Deep Blue beats chess champ Garry Kasparov. I don't know anything about the chess champ with AI. 2011, IBM Watson wins Jeopardy, showcasing NLP reasoning. You had mentioned that earlier. Then we got 2012, deep learning breakthrough through ImageNet. 2012 was more so when I started hearing about cryptocurrency, Bitcoins, things like that, but nothing too much around AI. And then 2016, AlphaGo defeats Go world champion strategic AI milestone, which is huge. I mean, whenever you start seeing AI defeating very sophisticated, intellectually smart people, that's when you're like, AI, this stuff probably has some pull here. And then 2023 to 2025, generative AI, ChatGPT, Midjourney, Claude goes mainstream. You know what I haven't heard about in a while, though? Was it DeepSea or Deep Blue?
DeepSeek.
Was it DeepSeek?
It's the China one.
The China one. I haven't heard about that one too much. Maybe because we're not in China.
Yeah, they are still churning out new models of DeepSeek all the time. Yeah, they come and go. Is Gemini better or ChatGPT? I think ChatGPT is better.
I would say ChatGPT
at this time, especially in terms of market share, but I believe in general, and especially with GPT-5
and Grok.
And I think it can optimize your fantasy baseball team, Edward. I think if you feed it your lineup, there's probably ways that you could do that. It might need more stats from you, but I have certainly used ChatGPT in, shall we say, similar predictive sports contexts. But yeah, Kasparov is a fellow American. But anyway, my first encounter with AI in my entire life was 2011 when Watson was on that run on Jeopardy. I just told you the story outside, but for the viewers, I had a technology teacher, computers, whatever, when I was in elementary school, who was a gigantic buyer of AI in the very early stages. Mr. Bailey, if you're out there, I hope you are so rich right now because you were so right about this in 2010. But we had a stretch when I was in elementary school where my technology teacher was super into it, and so every week when we had that class, the day after Jeopardy, he would make us watch the full Jeopardy.
That's fire, though.
It was like weeks and weeks and weeks. It was a crazy run that it went on. But yeah, then they started bringing in like the all-time Jeopardy MVPs to try to beat it, and just nobody could beat it. And at the time, I couldn't quite grasp the concept of artificial intelligence. Like my thought, I simply could not separate my brain from this thing is Googling stuff.
Right,
That was just always what I thought. But
I mean, let me ask you this: how have your behaviors changed? How often do you use Google? Has it changed?
It definitely has changed. I mean, broad Google searches have decreased, but I also I still use Google. I mean, I would honestly say maybe more than most who use LLMs.
You use Google for the most.
Just anything that I think Google can give me a quick answer for is really what it is. It's just like, I don't know. It's marginally quicker, but it's mostly force of habit because it really is no different. It's open the app, click the bar, type in the question.
Yeah.
But I don't know. It's a force of habit. But anything remotely complex or that I think would even require me to click into a link on Google, I'm using ChatGPT.
I've noticed with Google, it's like if I want to pull up YouTube or another large software or YouTube search, it's always Google. But from there, more complex, like you mentioned, is ChatGPT.
I also will use Google if I want. I will use Google to get me Reddit results. that's part of it.
100%.
Because sometimes I just want to hear.
I'm not gonna lie about it. Sometimes when I'm looking for something and I start to see Reddit popping up, I'm like, I'm not gonna find what I'm looking for. Usually Reddit is like the last, and sometimes they come through with the answer you were looking for, like that extreme nuanced.
Oh yeah,
very specific situation.
Like when I was building my PC, like Reddit was the
I believe,
because I had all types of issues getting Windows to copy onto it and getting the thing to actually boot and like post to my monitor, and Reddit was great. There's just 100 people who have had the exact same issue, and there's 100 different solutions presented, and you just sit there and try every single one.
100%.
But yeah, so AI on the come up, as we well know. If you're involved in the market, it'd be hard to not be privy to that information. So that leads us to our broader societal discussion for today, which is the fall of social skills. So for a long time, even predating AI, well predating the prominence of AI, digital communication has been replacing in-person interaction. This is pretty much true since the rise of social media. I'm sure that, I don't know though.
Everybody's parents complained about this though.
Yes,
right?
Yes. Everybody's.
This was like the first gripe.
Damn phone. Right. Yes, exactly. So this has been a thing. AI tools have now begun to even further replace the need for critical thinking, expression, even communication with each other. People are using AI to write their emails back and forth. Empathy and listening are declining due to constant distraction. That extends beyond AI to other topics which we've covered in previous shows. Children's attention spans are dropping. They're putting screens in their hands from the time that they're 2 years old or whatever. People avoid discomfort online, making real life conversations harder. This is certainly true. And I can remember being in like 5th grade, and it was like you had to text your crush. Like you could never actually work up the courage to like go talk to them. And I can remember being in 5th grade, and I couldn't work up the courage to talk to my crush in person. I did it over text. Went well, by the way.
There you go.
Know what's going on. But
on Kik.
What?
Remember Kik?
It was Snapchat. But yes, I do remember Kik. Definitely was involved with Kik. But anyway, I can remember at that age thinking, it's so strange that this is easier over text. Why is this easier over text? I know I'm conveying the same information to the same person. I know who's going to receive it. Why is this easier? And it was something I could never really wrap my head around, and honestly still can't to a certain extent. I mean, it's just, psychology and everything, but it's very interesting, and we're seeing an incredibly pronounced version of that now with the rise of AI. Social media rewards curated personas over authentic connection. That one is definitely true, and we'll get into some stories there in a second. And then beyond that, yes, fewer shared spaces, more screen time, isolation is becoming increasingly normal.
Yeah.
So yes, all of these things are definitely true, and yeah, I think, and honestly, sometimes I even will like have to stop myself as I'm opening ChatGPT and say, "Oh, I'm a person. Like I can do this. I can think about this. Like I don't need ChatGPT for this." But it's becoming more and more instinctive to just turn to that and let it be my brain as opposed to actually using my brain.
Right.
And that's a scary thing because I'm an adult who's aware of this happening. I can't imagine being a 4th grader in school right now and having access to all these things. I mean, you learning just basically becomes a choice. Like it's very.
No, it 100% does. And I mean, the other day I caught myself doing something. I was like, no, let me actually put in the brain power to do that because I started seeing those little behaviors, those little habits instead of using the brain power to do that. I think it really is dependent on when you use it because at the same time, if you think about it, that natural behavior is just to be more efficient.
Yes.
Like that's really what it is because we lean towards convenience in our DNA. But I mean, I thought the same thing and I kind of nip it in the bud whenever I see those behaviors. I'm like, I have the brain power for this. I can put in 5, 15, 20 more seconds of thought. And then it's also more authentic. And sometimes you could whip up something a little bit better. And if you want that better, then you could spit it back into ChatGPT. But I have caught myself some of those behaviors.
Yeah, and a major personal policy of mine that I think I will continue to uphold moving forward is that I don't ever use AI to communicate with other people. I will use it to, and then
right.
Like I've never had a text written in ChatGPT. Well, actually, me and my friends send meme like clearly ChatGPT text back and forth to each other sometimes. Like we'll make it like I'll say, write an incredibly dramatic medieval sounding thing telling my friend to get online, and then I'll send that to him, and it's very obvious. But in terms of like real legit communication, I'm never sending emails that are written by AI. I'm never sending texts that are written by AI. Everything that I do for the magazine and everything is never written by AI. And so it's just I think that it's great for support, but I do that because I know that those skills will go away. I mean, if you don't, keep flexing those social muscles, you will lose them.
Right.
We're seeing that, continue to happen.
Well, I know we were touching on the conversation too about the value of in-person conversations. You and I, face-to-face right now, shaking hands, doing all those kind of things. And it's like with the push of AI, and we heard those other perspectives earlier, it's like, will in-person be the hot commodity? Will things actually change? It's like AI was this, AI that, and people are trying to move away to those new opportunities, but the opportunity might land into face-to-face, person-to-person contact.
It's true, and especially as AI agents become more prominent, like in customer service capacities and places that you...
I hate AI in customer service is just one place that I just can't get around.
Oh, really? I'm in the opposite boat. I'm excited.
What do you like about it?
I'm saying let's do it everywhere. I don't know. I really haven't seen very many good examples of it yet.
Yeah.
Exactly. But like when you think about, something simple like a doctor's appointment or calling my insurance company. It just makes more sense if there is pretty much always going to be a binary is not the word, but a defined set of choices at each stage of a workflow. I would rather just have AI for that because we can rip through it real fast. There's no sitting around waiting. Like for instance, when AI says, "Can I have your date of birth and your social so I can verify your identity?" I would say those things, and then it would just immediately be like, "Oh, hello, Augustus Downing."
Right.
But with a person, I got to sit there and wait for him to type and see if they can find it in the system. And it's like, so I'm
getting there.
Yeah,
I hear you. I'm getting there.
But that said, it has to be good.
Yeah.
You can't try to integrate these things before they're ready.
I mean, just to show you how fed up I am with customer service AI, I forget what I was calling a couple weeks ago. Someone picked up and they started talking, and they literally had like such a good AI voice. I was like, representative. I was like, representative. And they're like, sir, this is a person. I was like, I'm so sorry. I was like, representative.
I'm sure that's happening more and more. Yeah, but it's just, I think anywhere where there's like, you're getting insane call volumes and there's typically high wait times, like an insurance company after a natural disaster, right? Like everybody's house gets wiped out where suddenly there's a whole city that's calling this insurance company and the wait times are long and all this adds stress. It seems like a lot of those things probably could just be resolved and ironed out with AI in 5 minutes, no wait time.
You would think so.
Yeah, and so I do think that there's interesting use cases for that. I will say to supplement this though, every AI chatbot, like help chatbot, like customer service that I have used sucks. And they suck so bad, and I don't understand why. It's
just a front.
I know.
It's just a placeholder.
It's like they try to be too restrictive, but they wind up just doing the same functionality of all of these virtual assistants we've had forever and ever. Also, let me throw this out there. Bank of America, lock in. Bank of America's virtual assistant, Erica, in the app is terrible. She is so bad. The machine is so bad. Bank of America, please, I'm begging you, talk to any one of these companies with a large language model and let me talk to that thing.
Erica, lock in.
Erica, you got to dial in, girl. They're going to replace you if you don't. Yeah.
No, I mean, we'll see the developments of AI and how we come around the corner into the end of the year here. But anything else to add before we wrap up here, Gus?
I will add one more thing here. Mike, I said I hate getting my mail out of the mailbox. I think it's been a month. I also really hate getting my mail. I don't know why, but I'll go like 2 weeks.
What do you prefer? A little slot in your door where it just slides in like the old days? We used to do that too.
Yeah, maybe.
But I mean, then you're gonna have papers right at the front of the door. I don't slide it under the door.
Just don't send me mail.
I was like, what's gonna make you happy, bro? Just tell me what's gonna make you happy. We'll do it.
Text me or send me an email. We live in the modern age. I can't believe how much paper mail I still get. Yeah, stop.
I feel that. Stop. That's going to wrap it up for today's segment. We always appreciate you guys taking the time to come hang out with us. We'll see how AI ravels on to the end of the year. And we'll be back here next Tuesday at 4:30 Central Time, and we'll catch you guys next time. Peace.